All right, it looks like we are live. All right, give me a second. I need to go ahead and share this to all of my pages. If you are watching this and you are an influencer, I don't care if you're influencing one person, share the video. All right. Don't keep look, the stock market is the kind of market where you want a lot of people buying the same thing that you're buying so that it can go up in price. All right. This is not the type of business where you want to keep all the secrets to yourself. This is a business where you want people to know what you're buying. So please share the video. I'm sharing it in my groups, the Ninja Trading group. I'm sharing it to Inside of Trading. And I'm going to go ahead and start. What I would like for you guys to do is if you could go into the comment section, let me know that you can hear me. Now I'm old school, so it's always first come, first serve, right? So if you want me to analyze your stock, if you want me to analyze your stock, hold on. If you want me to analyze your stock, make sure that stock is $1 billion in market cap. 1 billion in market cap. If you don't know what market cap is, you're going to learn today. That's how big that stock actually is. If it's less than $1 billion as an influencer, I really can't show penny stocks. The definition of a penny stock is a stock that's under $1 billion in size. All right, once it becomes $1 billion, it's legitimate. We can talk about any stock you want to. So try to keep it to 1 billion or higher. Now, if you're going to give me a stock, give me one stock, please. One stock. There's going to be a lot of people that's on today. I want you guys to give me one stock. Now, I'm going to start. I just want to make sure that I was able to get this in my trading rooms. All right. I think I see it in Insider Trading. And I see it in Ninja Trading. So I can go ahead and start. So welcome to Ask the Trader. The format for Ask the Trader is if you're a hater, you can stay. I love the haters. I love trader haters. All right. But for real, Merry Christmas to everyone. Happy to join you guys today. I get a lot out of these sessions, just like you guys get out of these sessions, right? I try to do my best to educate and to analyze these stocks, but I can't. I'm only one person. I can't analyze all the stocks that are coming out in the market. All right. I can't analyze everything. So I love doing these sessions because sometimes you guys put a stock out there that I might not even be watching at this particular time. And by using my methods, the What Would Joe Do method, we can see if there's momentum, if it's real momentum behind that particular stock or not. And then I'll tell you guys if I'm buying it or not. So I try to keep it simple, but I think we have enough people that are on now. So welcome again to Ask the Trader. Leave a stock in the comment section or any question. Now, look, I'm a full-time day trader. All right, I'm not faking it until I make it. All right, I'm a full-time day trader. Been day trading and investing in the market since 2007, 2008. All right, I'm an expert in stocks, options, futures, and cryptocurrency. I'm the leader on Facebook with receipts. Nobody has shown more receipts than I have. All right, I have over 15 years and over 30,000 hours of trading and investing experience. And anything that we talk about today are the opinions of Joel Harrison. All right, so let's go ahead and get started. Let me take my mug down to the bottom of the screen. So if you want to do a one-on-one consultation with me, you got to go to calendly.com/whatwouldjoeldo. Book a consultation with me. It's 45 minutes. I don't understand. Look, you guys need to learn how to buy low and sell high. You guys are buying high and then coming to me, right? You're spending $20,000 on classes and then coming to see me. Let's do the opposite. If you decide that you want to get educated in a space, everybody comes to me first and they say, "Hey, Joe, what's this options thing that everybody's talking about? I see a class over here that costs $29,950. Uh, why don't I pay you $50 and you kind of tell me what it is? Because more than likely, you guys are getting scammed." All right. And I hate it for you teachers out there that are charging $30,000 for a class that a lot of these institutions are offering for free. You guys can go on Charles Schwab right now and take a free course on options. All right. I like to take options also and give my little twist to it and my little strategies. But I know it's $1 million worth of information, but I make my money through trading and investing. So I like to give back by doing these consultations. Believe me, these consultations help me. I get to see what the public is buying. I get to see where the market is going. And then it gives me an idea of what I should be investing in it, why I should be investing in it. So I keep myself educated by doing this for you. All right. Because I make my money on the trading and investing side. So I keep the cost low. And it's like a barter system. I educate you. We talk about what you're doing. All right. So that's at Calendly.com. If you haven't joined my app yet, What Would Joe Do app? I don't know of any traders that have an app out there that's here to help you. There's an alert system there, and I have 8 or 9 videos on there that can help you trade and invest in the market. If you pay $50 a month, you get access to those videos. Those videos are a little bit older, so if you want more up-to-date videos, you probably want to go to my PayHip. All right, I just added a video in the PayHip today. All right, which was the 9 to 5 method for you guys that are out there that are busy. And we'll talk about that later. But you got to go to www.payhip.com/whatwouldjoe.do. That's where my video library is. A lot of you guys that are in the room didn't even know that it's been up for 5, 6, 7 years. You can go on there and learn anything you want without paying those exorbitant prices, for these classes. Come here first, get situated, see what it's all about, learn the fundamentals of it, and then if you decide that you want to go that path, go to it. But you can also book a consultation with me. It's $50 for an hour. I don't think anybody on earth can beat that, especially other traders and investors. All right, I created a GPT for myself, for my family, for everybody. I do not see why you guys are not using it. We're going to use it a lot today. All right. So if you're not hip to GPTs yet, you need to go out there and get a subscription, especially if you're in the workforce, if you always need information, if you need help with writing things, if you need help with anything, any question. The GPTs are the best, and a lot of you guys don't even know that they're available, and that's why a lot of these companies are going up in value because of AI. AI is being run, well, GPT is being run by AI. It's pulling information from everywhere, and it's at your fingertips. Anytime I want to fact check anything, even like during the elections, when I would hear, if I would hear, if I hear anybody say anything, I would go to Chat GPT and ask the question there just to see if it's truthful or not. You can ask stock questions. You can ask anything that's involving the market. You can ask personal questions. Like the other day, someone asked why a certain stock was selling off. And we went to GPT and it said because the insiders are selling. And then it lists all the insiders that were actually selling. So it's so much information at your fingertips very, very quickly. You guys need to get on the bandwagon and get it. And it also helps you with your investing and trading. There are a couple of rooms. This is being broadcasted over a couple of social media platforms. So if you want to get access to me, I'm normally in the insider trading room acting a fool. So I'm in there posting all types of posts. I do have my own special room, which is called the Ninja Trading Room, and that's pretty much my posts that are in there. There are a couple of other traders in there that are posting. Again, you can go to my What Would Joe Do page. There's a lot of free content there. And then you can also go to What Would Joe Do on YouTube. There's a lot of free content there as well. We talked about the ultimate membership earlier that you can do through my app. It's $50 a month. A lot of people take advantage of it because you get access to the fundamental basics of the market at $50 a month. You cannot beat that anywhere. No one can beat this price. So I dropped the 9 to 5 method today. All right. I created this method by mistake. I've traded the market all the time, right? I'm always in the market. I'm using the day chart. I'm using the hours and the 5-minute charts. And I wasn't hip to what the 9 to 5ers were going through. My sons, my wife, right? They work, all, 40, 50, 60 hours a week. My sons are very, very active. They're students, but they're also involved in a bunch of social activities. They don't have time to look at the market like we do every 5, 10 minutes or every hour. Sometimes they might miss a whole week or a whole quarter at looking at the market, but that does not stop them from investing in the market, right? So I created a 9 to 5 method. So A, you can always find trends on any and everything. And B, you can kind of figure out what chart you need to use that's going to help you with the strategy that you have. So I kind of broke it down into 3 types of people. So go ahead and grab that video. It's only an hour. I think it's an hour and 15, hour and 30 minutes long. So it's not going to cost as much as my other classes, which is why I call them my mini classes now. So that's the thing that I'm going to be doing for the next year. I'm going to just be dropping mini classes. If you guys want me to do a mini class on anything, you guys can send me and say, hey, Joel, can you break down the MACD? I'll create a mini class for it. Hey, Joel, break down Bollinger Bands. I'll do a mini class on it. Hey, Joel, break down, Elliott waves. I'll do a mini class on it. So, that's my thing. I've done any and everything. So I like to apply my eyes and my method to all of these different indicators to show you guys how to use them, I think, in the proper way. All right. So again, you can go to payhip.com/whatwould-Joel-do and you can grab that video. Now, look, guys, I'm not a technical type guy. So I think I ended up downloading the video and it might be a little big. So it will be in high def, but if it's taking longer than usual, it's because the file is kind of big. So if you are having issues with downloading that particular video, hit me up. I've already uploaded it on YouTube. I'll give you a YouTube link so you'll have access to it. And the one that's on YouTube, I think is in 4K. So it's really, really sharp. All right. So have fun with it. But we have enough people on. Let's go ahead and get to you guys' stocks. Investing and trading is easy. You make it hard. I've been saying this for a very long time, and I've been making a lot of people upset with this. And I don't know why people get upset with it. I mean, I get it. A lot of people don't want to change. A lot of people like to be difficult. A lot of people like complication. People, for some odd reason, feel like the more complicated something is, the better off it is, right? Joel, I want to study something that's going to challenge my mind. I'm like, why don't you challenge yourself in making money? Like, so many people want to get educated on the market and not make money from the market. Like, that makes no sense to me. Like, why are you in this? To make money or I don't know. I'm a doctor, Joe, but I just love the stock market. I love everything about it. It's just so exciting about me. I want to learn all the classes and go at it. Spend all your money learning. I'm trying to make money. All right. So investing and trading is easy. You guys make it hard. So when I simplify everything, sometimes it turns those type of individuals off. Because I need more. I need more to this, Joel. Look, it ain't more to it. It's just like being on a roulette table. You got black and red, right? Choose one. Every now and then you can pick 00 and 0 if you understand what that means. All right. But it's red or black. Look, the stock market's going to go up or down. You just got to figure out when it's going up and when it's going down and the time frame. And that's how you make money in this game. And is fairly easy. It's just that you guys make it hard, and it makes no sense to me. The market trends to the upside 80% of the time. Yet there's so many people that are in a room that's like, oh, the market's good, the world's coming to an end, Trump's coming into office, and everybody's gonna die. And I'm like, I'm not a fan of Trump either. But hey, if I see stocks going up, I'm gonna make money on those particular stocks. If crypto is going up, I'm gonna make money on crypto going up, no matter who's in office. All right, I can have my opinions, but first things first, I'm trying to make some money. All right, so investing and trading is easy. You guys make it hard. Simplify what you're doing. Simplify. I always tell people this. If you have more than two indicators on your charts, I promise you, you can't trade. What are you talking about, Joel? Why are you trying to offend me? I got 7 or 8 indicators and you probably can't trade. Well, I took this class and this person who made billions of dollars, I'm like, well, how much did you make? Are you making that money? Did they show you those receipts? Did you see their bank account or did you get bamboozled? Right? Trading and investing is mad easy, guys. I train a lot of these people that are handling millions and millions of dollars on Wall Street. It's just that I can't talk about who those people are because it's confidential. All right. I train these guys. I know what they're doing. They don't have the type of knowledge that a lot of you guys have. We are so far advanced than they are because they're not trading and investing like we are. They're getting billions and billions, millions and millions of dollars from pension funds, and their job is to place that money, and then they're making money off of that money. Yeah, they want to be in something like gold, like Apple or Nvidia or what have you, but they're not looking at the market the same way we're looking at it. So they don't have to understand momentum and 200-day moving average and volatility index. We do. We're trying to change our lives. All right. So investing and trading is easy. I spend a lot of time here because I really want you guys to understand how basic and fundamentally easy it actually is. So I want you guys to go back, watch a lot of my videos, right? You're going to see me analyzing stocks, and then, 20, 30, 2 years later, you're going to see the outcome of what happened. You can go all the way back to 2018 and start watching those videos and watch how things happen. Okay. So I use the what would Joe do method. The what would Joe do method is what, when, where, why, and how. We learned that in grade school. Whenever you wanted to answer a question, the teacher was like, all right, guys, what? Y'all remember we were like, what, like 8, 9 years old? Well, I want you guys to apply this to the stock market because a lot of you guys are coming into the stock market like you're 8, 9, or 10 years old. You got to be able to answer these questions. What am I trading? When am I trading? Where am I trading? Why am I trading this? And how? Y'all have no strategies behind what you want to do. And look, I've been there, done that. The reason why I have the ability to talk about y'all is because there's nothing that y'all haven't done that I haven't done already. Yes, I've spent $10,000 on an options class and I got 4 CDs. 4 CDs. Yes, I was in a class that I paid $250 for to get educated, flew all the way to Indianapolis to do it, drove my mother-in-law's car in 20-degree weather to a class where there was about 50 people in the class. I was the only Black person in that class and the youngest in that class. We learned about support, resistance, trend lines. I felt so good about the stock market. Then these suits came into the room. And I was like, who are these guys looking like Donald Trump? And they were like, okay, we know you took this class for $250. But what if we showed you something that nobody else knows about? They're called options. And I was like, wow, what the heck are options? And they were like, look, only a limited amount of people are going to be able to take this class. So if you swipe this card and pay $10,000, you too can get in on the secrets. I swiped it. They gave me 4 CDs and I never saw them again. And then I had to eventually teach myself how to trade options. So I've been there, done that. All right. I've had accounts $50,000 that I've blown. Zero. 50,000 again. Zero. I made all the mistakes y'all made. I listened to people who said that they were legitimate and then they weren't legitimate, right? I've tried to listen to people who didn't have receipts and they led me astray. All right. Receipts matter. Anybody that says receipts don't matter can't produce receipts, period. I've always said that. If you can't produce the receipts, maybe you're a fraud also. Okay. So it's important that people show you not only what their strategies and their methods, but something to back it up. Okay, what did you buy in the last year? Did you buy one share? You could buy one share or something. There are cats out here that won't even buy one share and show you guys. And y'all are so and I do this because there's not a week that doesn't go by that I don't do a consultation where somebody tells me how somebody stole their money. Every single solitary week, I hear a horror story. All right. So that's where you hear the rage and the rant. I'm really trying to protect you guys. That's why I keep my costs low. That's why I meet face to face with you. And that's why I'm trying to put you guys on the right path. All right. I've done so much bad in my past life. I'm trying to do right now. All right. So let's get to you guys' stocks. We can be here for a while too, because I ain't golfing today because it's like 40 degrees outside. So if we go for 3 hours, 3.5 hours, I don't care. So let me go ahead and get to some of you guys' questions. All right. Cool. All right. First stock, Yolanda Nash. Hello, Yolanda. She wants to know about Eli Lilly. All right, so let's go ahead and look up Eli Lilly. And we're using the Thinkorswim charts offered by Charles Schwab. So I think it's Lilly, Lly. All right, so we're looking at Lilly, and as you can see, now that people are watching my lives, they kind of know what questions to ask. Not only if you're going to give me a stock, you have to give me a time frame on it. I'm trying to teach you guys how to think differently. Am I thinking long term? Am I thinking as a day trade, intraday trade? And there's no bad question because we have intraday traders, we have swing traders, we have long term traders, we have investors. So I would like for you guys to give me the stock, but then tell me kind of what you want to do with it. So Yolanda said, "Hey Joel, Eli Lilly, long term." Now, long term is also subjective because some people think long term is 6 months. The definition of a long term trade is an investment. The definition of an investment is anything that's longer than 12 months. All right. So I'm just assuming that it's 12 months. Now, I'm going to introduce a couple other charts now. So if you're thinking long term, first thing we want to do is we want to look at I want to see what it's doing short term just to see what's going on. And it looks like I already analyzed this stock before. But let's look at Eli Lilly. Eli Lilly is very big, guys, into the GLP-1 drug. So the weight loss drug that's out there that's causing so much hysteria out there is doing really, really well. So short term, and what I mean by short term, that's 7 to 10 days or a couple of months. The day chart is going to give you that information. And short term, looks like Lilly is doing okay. We always want to use the 200-day as bias. The 200-day moving average is the most used indicator on the planet. So out of all the indicators that are out there, you can just about talk to anybody in any asset class and everybody knows what the 200-day moving average is. If the 200-day moving average is angled up, it increases your luck. You want to trade it to the upside. Anytime you get under the 200-day moving average long term, anybody and everybody should be buying Eli Lilly. I even picked up some Eli Lilly just recently. All right. Why? Because it's underneath the 200-day moving average. Anything under the 200 is on sale. Look at this. If I was to go all the way back to when the 200-day first started coming up, I want you guys to start using your eyes and stop using your ears. Y'all ears be losing y'all a whole bunch of money. Look at this. This isn't something that this 200-day moving average didn't come here and say, "Ooh, we went to this price, so then the line came here." No, people like me knew to buy it every single time it touched that 200-day. Do y'all know when this was? This was during COVID. During COVID, if you were an investor, you would have known to buy Lilly right here because everybody and their mama knows that when the 200-day is angled up, it's a bullish stock. The best price to buy it is when it hits its 200-day moving average. It's just like if I go on Auto Trader and I see, I'm gonna piss a bunch of people off. If I saw 3 Cybertrucks on there, and I saw one going for 100K, and I see another one going for 125, and I see one going for 90, right? The 90s are probably gonna get picked up, all right, even though y'all think it looks like a garbage can or what have you. All right. 100 is going to be the average, 125 is going to be the outlier, right? Well, the average is like the 100. Anytime you get pricing underneath it, it's going to be on sale. Look at this. Anytime it touched the 200 day, it was on sale as long as the 200 was angled up. Check it out again. Y'all see this? It's like magic. Joel puts on a magic show every day. It doesn't matter what stocks we look at. It's almost always the same patterns. Y'all kill me with that. It's just because I'm educated on the technical side of the market. Y'all see how every time it comes down to the 200, it was the time to buy it? That was 2020. That means that every single solitary time from 2020 to now that it touched the 200-day moving average, 6 months later, you were probably making money, especially if you're buying it long term. So, Yolanda, if I was buying it right here, it doesn't mean like every strategy and every method is not 100%. Some are, but most strategies aren't. All right. So if I was a betting man, and I was looking at this. Now, the day chart is just kind of showing me briefly what's happening. Because you want to trade a little bit longer, I'm going to probably do a longer chart, right? If you want to trade 8, 9, 10, 11 months, I probably want to look at maybe a month chart. All right. And if you pulled up a month chart, what are you going to notice? What do you notice on this particular chart? You see that it's up in the stratosphere. Now, here's what's tripping a lot of people off. This trend broke. So Eli Lilly went up in price, and now it's starting to break that trend. The TTM trend is going red. I'm pretty sure if I had the MACD histogram down here, it would be going red too. But it's still a fairly bullish stock. So I wouldn't be afraid right now if you were buying it long term. But if you were buying it short term, trying to make money in the next 7, 14, 21 days, I would be cautious because long term, it looks like it's still a hold and a buy. But short term, there's what we call a 513 cross to the downside. All right. You see this 513 cross? That means there's probably some short term pain. That doesn't mean that you can't buy it for the next 3 to 4 years. And it looks like it's been trending down for about 8 days. This is still red. This is still red. So would I just be buying calls right now that are 30 days out or 20 days out, which a lot of you guys be doing? Heck no. I want to buy it when it starts to trend to the upside and it looks like this. This is when I like to get in if the 200-day is angled up for a short-term trade. If I was an investor, remember what I said? I just bought some recently and I plan on buying more if it drops lower. But Joel, if you know it's going to go down for the next 7 or 10 days, why are you buying it? Because I'm thinking 3, 4 years down the line. I don't care if I get it for 770 or 670 if it's going to be 2000 in the future. Okay? Depends on your strategy. All right. Hopefully I was able to answer that question for you, Yolanda. All right. Of course, I knew we were going to get this one. MicroStrategy. So what is MicroStrategy? MicroStrategy is basically Bitcoin. All right. So it's a company out there, and Michael Saylor, who is now like one of the most famous Bitcoin owners, who I believe is the CEO of MicroStrategy, who's claiming that Bitcoin is going to go to $15 million a coin. I would like to see that, seeing that I own a coin. I would love to have $15 million in the future. Their company buys Bitcoin. So I don't even know what MicroStrategy does, but I know that they buy Bitcoin. All right. So a lot of people love buying it because before ETFs came out, there was really no way to have exposure to Bitcoin through your 401k or your IRA unless you bought something like a Coinbase or a MicroStrategy. Now you can buy Bitcoin, BTCO. So a lot of people love MicroStrategy. But what is MicroStrategy doing? Like, look, guys, I see that the 200-day is angled up, so it increases your luck. But just with your eyes, just with your eyes, because y'all ears be leading y'all astray. What does your eyes see? Your eyes see that MicroStrategy looks like it wants to come down. Remember, well, y'all don't know this. Stocks usually come back to their 200-day moving average at least once a year. Once or twice a year, they're going to see their 200-day moving average because it's the average price, the average price. This is way above the average. If it's below it, it's below the average, which is why a lot of people love buying stocks like this or any stock that's above the 200-day. Remember how we just saw Eli Lilly? And y'all were like, ooh, look at how every time it hit the 200-day moving average, you could have bought it. And 6 months later, you would have made a whole bunch of money. Well, guess what? It doesn't matter what you buy. If you learn price action, it's the same way. Look at that 200-day moving average. Joel, it can't be this easy. Joel, every time I do this on my charts, I don't get this. You must have some special feature where it touches the 200 every time. No, I don't. No, I don't. Every single solitary time it touched the 200-day moving average when it was angled up, keyword angled up, it was a buying opportunity. That was 2023. So from March 2023 till now, every time MicroStrategy touched the 200-day moving average, y'all should have been buying it if you like this particular company. But if you don't use charts and you're using your ears to listen to podcasts and listen to the TV and listening to cousin Ed who don't even know what Bitcoin is, then you're going to get led astray. That's why you need charts. You need the fundamentals and the technicals. MicroStrategy fundamentally buys Bitcoin. Technically, it's either overpriced or underpriced. The average price is the 200-day moving average. I can't break it down any more simple than that. What is it doing short term? Short term, 513 cross is going down. So, I'm just going to buy some call options for next week. Why? Because the market sold off real bad yesterday. It's probably just a dead cat bounce. What? This is the nonsense that I hear all the time. All right. If it's trending down, it's probably going to trend down, probably down to the 200-day moving average. When it gets down here, I promise y'all are going to hear MicroStrategy's probably going to go bankrupt because the stock just dropped from 600 or 500 all the way down to 200. I told you. And then 12 months later, it'll be sitting at $1,000 a share because that's what stocks do. They go up, people take profit, they go down, they hit their 200-day moving average, they go back up, and then they hit new highs. And they do that over and over and over and over and over again. 80% of the time, it's going to go this way. 20% of the time, it's going to go this way. Right now, it's going this way because it went this way for like a full year. All right. When MicroStrategy drops in price, guys, it's going to drop. Look, if you just take this little tool right here and you just go to this high and you go to this low, it tells you about how much it drops when it drops. You shouldn't be surprised if MicroStrategy drops 50%. That's a 50% drop right there. Then it hit this little high and dropped there. That was a 28% drop. All while it was still bullish. Then it hit this little high, dropped about 40%. Y'all see that? That's like a 40% drop, a 30% drop, a 40% drop, a 30% drop. So if it drops 40%, whoop-de-doo. That's what it does. But some of y'all don't know this because you're using this and not using this. So if MicroStrategy is at 540 right now and it dropped to this price, should you be surprised that it dropped? I need my glasses. I think that says 36%. So what? That's what it does. 36%. We just saw it drop 40% drops in like a year and a half. So can it get down to here? Yeah, if it gets down to there, it drops 60%. Now that's a pretty big drop. So you want to watch MicroStrategy short term because right now it's looking kind of ugly. And if MicroStrategy drops, it's probably because Bitcoin is dropping, right? And if Bitcoin is dropping, everybody knows Bitcoin drops 50% every single solitary year. How do you not know this? All right, you're learning it today. All right, from this crazy dude named Joel. All right, cool. Anthony said, peace. Shamika says RGTI. Now, a lot of people are buying RGTI. All right, it's dealing with quantum computing. So let's use Ask Joel GPT to give us an idea of what's going on with RGTI. So if you don't know what the GPTs are, I'll show you how it works, right? So I do have a Chat GPT account. I think I pay like $20 a month. All right, I paid like the highest amount because I have my own GPT. There might be lower amounts that you can pay. All right, y'all got it anyway. Y'all out here paying $5,000 and $10,000 classes. Y'all got it. Get a GPT. Once you get the GPT, go over here and search for other GPTs like Ask Joel GPT. And let's say I wanted to ask, what is RGTI? And let's see what it does. Is it RGTI? Yes. What is RGTI? Not only did it pull up a chart, but look at what it tells you. Remember how I told you it's quantum based, right? RGTI, which is called Rigetti Computing. It's in Berkeley, California, based out of Berkeley, California, specializing in quantum computing. Founded in 2013. It develops quantum integrated circuits and offers cloud-based quantum computing services through its platform Forest. All right, so Forest is important. You might need to write that down somewhere. This platform enables programmers to write quantum algorithms using the quantum instruction language, QUIL. All right, very, very important. All right, so anytime I get a stock tip like that, I'm like, ooh, pretty good company. But I also want to know how big it is, right? Because it's not really telling. It probably says it somewhere in there. So I'll say, what is the market cap of RGTI? Market capitalization is if it has if you take all the shares that it offers and you multiply it times 9, it's going to tell you how big this particular company is. Anything around $1 billion, guys, is small. $1 billion is like a baby when it comes to other companies that are in the market. Because think about this, the penny stocks that everybody trade that are like these little baby companies, $1 billion is as soon as it becomes $1 billion company, it's no longer considered a penny stock anymore. So you figure $1 billion is what gets you into the real world of stocks. So if you look up and you see that quantum computing is what everybody is involved in, and you go over here and you see that it's only $2 billion in size, that might be something that can jump 25% in one day. You guys expecting NVIDIA, which is a $4 trillion company, to jump 25% in one day because Joel then showed you his receipts and he up 2,400%. You don't understand how stocks work. All right. If NVIDIA jumped 25% in one day, what's 25% of 3 trillion? 750 billion? That means $750 billion had to be invested, which is almost $1 trillion, has to be invested in NVIDIA in one day for it to go up 25%. But see, a stock that's this small, that's only $1 billion in size, it only needs $250 million to be invested in it in order for it to go up 25%. If it was $1 billion company. You see how the smaller a company is, the more money that you can make. Y'all don't do that. Y'all be looking at the stock price. Ooh, Joel, at $9. Instead of buying this stock over here that's $900, I'm gonna buy this one and I'm gonna put as many shares as I can in it. And you luck up because it's a small company. But what you guys don't realize is that a lot of these $9 and $10 companies that are out there, even cryptocurrencies that y'all are buying, they're already 50 billion or 100 billion in size. And they're fooling you. It's an illusion. You're getting bamboozled, just like you did with the stock classes, just like I did with the stock classes. But we ain't getting bamboozled no more. All right, we're getting educated. All right, so that's RGTI. So I mean, it's a fairly new company, so it's not going to have too much on its charts. But as you can see, you see how this bad boy blew up in price. Now, you could have caught this way back here. You didn't have to be late. Anybody buying RGTI right now as a 14 or 21 day trade, you late. Wait for this bad boy to pull back. Wait for it to pull back. As soon as it starts to look like this again, this is what you want to see. You want to see a 513 cross, and you want to see momentum go back into that company. That's where you make all the money. The earlier you get in after that 513 cross happens, then you get to capitalize on a move like that. See, it takes a break, 513 cross, green, blue. Then you make money to the upside. See how you got a 513 cross? See how it started to explode in price? Getting in 10, 15, 21 days late, this is why y'all losing money. Because if I look at the chart and I see that on a day chart, it's trending 15, 20 days. It depends on what your strategy is. That's why I kind of broke it down in the 9 to 5 method video that I dropped today. Because depending on your strategy is going to determine what chart you're looking at. Most of y'all will look at 5 charts and then have one strategy. And then I'm like, well, what is the strategy? And the strategy is just to make money. That's not a strategy. Like, what's your time frame? I don't know. I just go and look at all the different charts. And when all the charts line up and they're all going in the right direction, then I know to buy. I'm like, that sounds smart. But how often does that happen? Once every 7 years? You going to invest once every 7 years? That doesn't make any sense to me. And I see a lot of you guys doing it. And if you're doing it, I'm sorry. It's just, I chuckle because those are the types of strategies I used to create when I first started trading because I really believed in that. Everything has to align. Now, I do have things that have to align, right? I am making a lot of jokes, but I don't have so many different things. Like I need something on the upper chart, something on the lower chart. Like if the TTM trend and the TTM squeeze are going in the same direction, I can make money. I ain't flipping the 7 or 8 charts doing the same thing. Like that's just I wouldn't be able to be a day trader, a swing trader, and an investor if I did that. I would drive myself crazy because I wouldn't know when to take a trade because one chart is going to always be saying one thing and one chart is going to be saying another. And then I won't be able to capitalize on something like a RGTI. So what matters to me right now is if I wanted to make money in 14 days, would Joel buy this? No, I wouldn't because it already made the move. Now, it doesn't mean that it's not a momentum stock because I can look at the week chart and see where it is. Like it's already almost at its all-time highs. Its all-time highs is 1275. Joel ain't buying nothing at its all-time highs. Some of y'all didn't even know that it's at its all-time highs and y'all throwing 5 figures at it. And then get mad at me when I call y'all out on it. And I'm like, yo, you know it's near its all-time highs. Oh, it is? Oh, it is? Yeah, how come you didn't know that? I didn't know, Joel. I just threw $25,000 at it, hoping I can make money because so and so said buy it. That's y'all's trading strategies. All right. And then get mad at me. Why you mad at me? Because I'm calling y'all out. It's at its all-time highs. All right. So be careful. All right. And even if you're looking at a week chart, this thing has gone up for, remember, these candles represent a week. These candles represent a week. This is week 1, 2, 3, 4, 5, 6, 7, 8. This is the 10th week. And it finally hit its all-time highs from 2. You 10 weeks late. Not you, not you, Shamika, because I don't know what you're doing with it. All right. But some of y'all getting in it today because you saw it. Some of y'all already threw some money at it, which is fine. I don't mind you guys gambling. Just know when you're gambling. All right. But you got to kind of figure out, what is your strategy? Is it 14 days? Is it months? Do you want to hold this for years? Joel ain't buying nothing at its all-time highs like this unless, I'll take that back. If I really believe in something like this and I know that I'm going to hold it for 4, 5, 6 years, then my strategy is not based off of what the charts are. It's fundamentally, I'm buying this company because it's $2 billion in size. There's another company that's similar to it that might be 20 billion in size. So I'm going to hold this from 2 billion to 20 billion and make 10x. That's a strategy, guys. I don't have to look at these charts. And if it drops in price, I'm going to buy more because the goal is 20 bill. So if it drops to 1 billion in market cap and $6 a share, the strategy is to hold it for 4 years. So the lower it goes, the more I should be buying. Y'all see how that simple strategy goes with what I see in the charts? I want you guys to start doing the same thing. All right, cool. Shamika said, Christmas shopping done. Thanks. That's cool. That stock went through the freaking roof. And guys, she is like the best. Shamika is, if you need somebody to plan your vacation, she planned our vacation to the Maldives. Shamika, and Shamika, I don't know if this is true or not, but I could have sworn I saw a commercial of yours. I thought it was your commercial. So I was watching CNBC and I saw a commercial and I thought it was your company. If it wasn't, that's my bad. But if it was, congratulations. All right. QBIT. All right. Anytime y'all see Q in the front of anything, it's probably a quantum-based company. See what I said? Quantum bit. So Q is going to be the key word now, the key letter now. Anything with a Q on it, you're going to see them exploding in price. And that happens, guys. You're going to see stocks that do this all the time. I don't know if this stock is large enough for me to show. Is it QBIT? That's what you wrote? QBIT? Maybe you were talking about QBUT or QBT. All right, come back to me on that one because there's a bunch of QBs that are out there, but I tried to pull up QBIT and nothing is coming up. Oh, I mean, it says quantum bit induction, but nothing is popping up. It looks like the company, I don't know, it's not doing anything, so I can't really. Oh, let me look at a better chart. I am looking at a different chart. Nope, it dang near broke my screen. All right, so I can't pull it up. So try another stock for me. All right, Jamie said, "Hello, do you recommend the one? Do you recommend the one-on-one? Oh, over your video options first. I always recommend people watching the video that I have first because the videos that I produce are they're very, very specific, so you'll be able to have visuals that go along with the teachings. So I do recommend you guys watching, like, if you want to learn futures, buy my futures video first, then do a one-on-one consultation with me. We'll break down the video and I'll be able to answer any of your questions. You're interested in cryptocurrency or options, the same thing. You're interested in my day trading videos or my 9 to 5 videos. I always recommend watching the videos first, then doing the consultation. Now, some people like to do it in reverse because I don't know what you want to do. So every now and then a person will say, Joel, I don't know exactly what I want to do. Can you help me with it? So they'll do a consultation with me. I'll listen to what their strategy is. And then I'll say, oh, as a consultant, I'll recommend you going this particular route or that particular route, or this video is going to be best for you. Or, oh, you shouldn't be taking that class because that's not even what you want to do. You probably need to go this particular route. So you can go either way. But in my opinion, I always tell people, if you know from the jump that you're going to learn options, buy the options video or the futures video first, then do the consultation with me. It's a good question, though. All right. Monique says, are the live visuals blurry for you all as well? I don't know why it's blurry. It should be coming in pretty clear. But if it is, let me know. All right. I'm pulling it up on my. No, because I'm pulling it up on Insider Trading right now. And it's pretty clear. Okay. So that might be on your side. If not, go onto your computer, type fast.com. And I don't know if you guys know about this, but if you go into the browser and you type fast.com, it's going to tell you how fast your Wi-Fi service is. Okay. And sometimes it might be low and you might need to increase it. William said, hey, Joel, what's going on, William? Misty said, hey, Joel, NVO. All right, NVO. NVO, guys, is Novo Nordisk. All right, we looked at Eli Lilly earlier. Eli Lilly, GLP-1 drug. Novo Nordisk, GLP-1 drug. All right. So the GLP-1 drugs had a hit, and I'm mad because I kind of missed out on it. And I'm going to be honest with you. I got on the GLP-1 train a little late. And I'm normally kind of early on things like that. So what I'm looking at now are the new GLP companies that are coming out, like Structure Therapeutics, because I think the normal GLP-1, you have to take a shot. These new companies, you're going to be able to take a pill. And, people are going to prefer taking the pills versus taking the shots, especially if they're not going to have as many, I forgot the word I'm looking for, when things go wrong with you, right? If it's going to have decreased, I don't know why my mind isn't working, but, if you're not throwing up or if you're not having any side effects, that's what I was looking for. So the less side effects and pill version should make those companies go up in value. But look at what we noticed on the day chart. On Novo Nordisk, the 200-day is angled down. I drew this line a couple of, the last time I did a live, and I said, guys, this is probably what this stock looks like it wants to do. And that looks similar to this. Okay. Even if you thought it was going to go up to the 200-day moving average, the 200-day is angled down, so I don't want to be around. The 200-day is angled down. Joel Harrison don't want to be around. I either want to buy Eli Lilly or I want to buy something else because it usually takes a while to turn a 200-day moving average back around. Okay. So short term, it looks like it wants to go down. Now, that doesn't mean that you still can't buy it long term, because long term, looking at a week chart, even the week chart is nasty. Look at that. You would have known to get out of Eli Lilly way back here on July 22nd, 2024. Look at this. As soon as you got a 513 cross and it was red, you should have been out of this bad boy. But if you're not using charts, these are weeks. You had 1 week, 2 weeks, 3 weeks, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 21 weeks to get out of this stock. That's why I created the 9 to 5 method. 21 weeks to get out of this. That's what, 5 months? 5 months you should have known to be able to get out of this. Not you, Misty, because I don't know what you're doing with this stock. But if you're in this particular stock and you're looking at a week chart and you start to see it go bearish, Joel is selling it, okay? And waiting until I see it look like this again. I want it to be going up in price. 513 cross, bullish down here, bullish down there. And I don't have to be the person that buys it here. I want to wait and make sure that people are buying it for 1 week, 2 weeks, 3 weeks, 4, 5 weeks. That's 6 weeks of buying. But because I'm buying this for multi-weeks, I can ride this trend to the upside. And when it gets here, I can bring my stop to break even. So that even on a move like this, well, dang, it came all the way back to the price that you would have bought it way back here. That's crazy. So this is a crazy move for Novo. But it got really, really close to the 200-week moving average. And you know what, guys? That is a great buying opportunity if it gets down to the 200-week moving average. That's even stronger than the day. Remember, the 200-day moving average is way up here. And usually when a stock hits its 200-day, it bounces. This bad boy went through the 200, dropped for 5 months, and dang near touched the 200-week. So, you know, if I had known that it had dropped all the way down here to 78, I probably would have bought some with you if you're buying it for a long term. And when I say long term, I'm talking about a year to 2 year trade, because you would be getting Novo. You would be getting it $46% off. So it's almost cut in half. It was a $148 stock that dropped down into the 70s. Now it's at about 90. So it's still bearish, okay? You're still not out of the woods yet. So you might experience pain for the next 6 months to 12 months, because when a 200-day moving average turns down, it usually takes about 200 days to turn it back up. All right, so be careful with Novo Nordisk. All right. I don't even want to try to pronounce this, but you finally caught alive. Let's talk about shorting this ish. All right. So let's say you were thinking about shorting the market. All right. This is a little bit advanced. You can make money on the market going up. You can make money on the market going down. If I wanted to short the market, I'm going to go into the indexes first. And if the indexes are showing a short, then I might decide to short stocks. Now, it depends on your time frame also. Remember, long term, looking at a week chart, ain't nothing telling me to short the market except that we're at all-time highs. And if you look at these moves, look at these moves on the week chart. Now, this is the spiders, which is the S&P 500, represents the 500 largest companies in the world. This is what investors look at every single solitary day when they're trading. Just by my eyes, because I don't want y'all to use your ears anymore. Watch my videos without sound. You'll learn a lot. Just look. What do you see? What do you see? When I look at this chart really quickly, the first thing that comes to mind for me is that when this is going up, look at these trends. That's like a 5-candle trend. That's like a 10-candle trend. That's like a 15-candle trend. That's like a 10-candle trend. That's like a 15-candle trend. What do you notice? These all look about the same. So just like what is that? I don't want to say enema, because you know what an enema is. I can't pronounce your name, and I apologize for that. But you're noticing something. There's a trend. Now, I don't like to be the type of individual that try to time the market. The only time I time the market is when the VIX is over a certain value. The VIX hit 28 the other day. Did any of y'all buy something? I did. The VIX rarely goes above 20. We finally got it. We talk about the VIX every day. I know a lot of you guys are waiting on 50 like I got it in August. On August the 5th, the VIX hit 50. That's when I bought Bitcoin. I caught the bottom. bought it for 49.9. I'm going to keep saying that until Bitcoin drops to 49.9. So until then, I got it for 49.9. I don't know anybody that bought it lower than I did on a dip. Well, the market just hit a 28. It's not a 50, but it's still some significant selling. All right. That's going to happen in the market. Well, looking at the market right now, all it did was, even on these little pullbacks, because this is important. It has been making big moves, big moves, big moves. But look at the moves to the downside. They were fairly short. Now we're looking at a week chart. So, this is 5 weeks of selling. This is 5 weeks of selling. This is 10 weeks of selling. This is 5 weeks of selling, 5 weeks. Now, y'all see how this is 5, 5, 10, 3, 5, but these are 10, 15, 10. It's showing you that the longer trends are to the upside, even though a lot of you bears only want to short the market when 80% of the time is going up. Doesn't mean that you can't make money to the downside. It just means, do you know what you're doing? So would I be shorting this long term? No. Charts still say that it's bullish, and we're supposedly in the second year of a 4-year bull run. Bull runs usually last 4 years. Trump's about to come in office. Yeah, the market might sell off. So maybe I want to look for some short-term selling. So I'm going to look at a shorter chart, like maybe a day chart. And when I look at a day chart, what is it showing me? Well, when we get a 513 cross to the downside, how many days has the market sold off? Looking at a day chart, these represent days. Well, when we got a 513 cross here, 510, we got about 10 days to the downside. When we got a sell off right here, we got about 1, 2, 3, 4, 5 days to the downside. 5 days, 5 days. When it sold off here, we only got about 3 days to the downside. When it sold off here, we got about 1, 2, 3, 4, 5, 6, 7, 8, 10 days. So what? 10, 5, 10, 5, 10, right? 1, 2, 3, 4. So basically less than, like, the market will not sell off more than 10 days. So what day is this? 3. So could this sell off till next Friday? Yeah. And then it'll probably be over. Y'all get that? In 7 days, what will it be, guys? It will be a new year. Actually, what's today's date? The 22nd? It'll be close to January 1st. This is probably just tax selling. People are just selling, locking in profits, waiting for next year, waiting to see what Trump's going to do when he comes into office. Maybe the market sells off for the first quarter before we start ratcheting back up to the upside. We want to see what's going on with these tariffs. There's a lot of uncertainty out there. So I would say for the next 6 months, the market's probably going to be volatile. But long term, it shows that we're going to be all right. Yes, we are in the stratosphere. I get it. We are in the stratosphere. When it does sell off, it looks like we sell off for about 5 weeks or 10 weeks. That makes a lot of sense. If we start selling off now and every quarter consists of about 12 weeks, you see what I'm saying? Trump comes into office. You start seeing some selling maybe in January. The market sells off for about 10 weeks. Right after about that first quarter, the market's going to be ready to take off again. Maybe the market sells off 5 or 10%. That's why we go here and we say, all right, when it did sell off, how much did it sell off? When it sold off here, we pulled back about 6%. When it sold off here, we sold off about 10%. Actually, we sold off about 9%. So 6%, 9%. How much was this big move? That was 10%. This was a 8% move. This was a 8% move. This was a 17% move, but that was way back in 2022. So we got an 18% move 2 years ago. And then after 2 years ago, we only got 8 9, maybe 10% moves. So how much are we down now? Well, when we hit a new high, of 609, if we were to go down to this low, we dropped about 5%, 4.5%. That means if it drops 10%, which it looks like that's probably around the average, we could get all the way down here to the 550 range. Is there anything in that 550 range that's significant? Yeah, there was a resistance area right there. So if I was a betting man, we get down to about right there. If we break that, we got another level that's down here, but I don't know if we get all the way back down to 509. Because if we get down to 509, that's a pretty decent move to the downside. So let me take my drawing tool again. If we were to go from the highs here, which is 609, and we were to drop to this 564 area, that's going to be about 7%. Down here is going to be about 16%. If it drops 16%, that will probably be the most I think that this bad boy can drop. And if the S&P 500 guys drop 16%, you're almost guaranteed a 20% drop in Apple, Amazon, Microsoft, Google, probably close to 50%. Because when the market drops when the S&P drops that much, because other stocks have a higher beta, and I created a beta video so that you guys can do calculations to kind of get an idea of how much stocks can drop. You're going to see some significant drops in the stocks, but long term, everything is still intact. As long as that week moving average is angled up, you good. Every single time the 200-day came back and touched the week chart, it was a buying opportunity all the way back to, look, the 200-week moving average started to go up in 2012 for 13 years. Every time we touched the 200-week moving average, it was a buying opportunity. We're nowhere near that. Look at this. Here, here, here. This is probably COVID. Yep. Here. We got close to it right here. And look at where we are, way up there. Woo! We all the way up here in the stratosphere. Let me clear everything up. Whew. If we were to drop all the way down to 452, people will literally think the world was coming to an end. I don't think with Trump loving the stock market the way he does, I can't see it dropping all the way here. If it does, it'll be a 25% drop, which is a significant drop for the market, but it's not terrible. It's terrible, but it's not like 2008, 2009. All right. I think we dropped 50% during that time. All right. Cool. Spent a lot of time there because this is the S&P 500. All right. Andrew said, "What's up, Jay?" All right. The first Trump stock. All right. Let's look at DJT on the day chart. All right. Now, one thing I do like about Trump is that I don't think he really cares too much about this stock anymore. And they're heavily thinking about, I don't know if you guys know this, but Trump's family has a crypto business. All right. So you literally have the first crypto president that really wants this cryptocurrency to rise in value. And they just hired, I forgot his name, but they just hired somebody to oversee and regulate this crypto market. And that person is a crypto person. So you really, really need to be thinking about crypto. But let's look at DJT. All right. Trump media. All right. First of all, most of us don't even know how big Trump media is. So instead of going to Ask Joel GPT, if you wanted to just quickly look and see how big DJT is, you go to Yahoo Finance. So once you go to yahoofinance.com, Watch this. When you pull up DJT, it's going to give you all the information you need about that particular stock. It's at your fingertips. All right. If I look at the 1 year and 5 year chart, you see that DJT is actually not even as high as it was in 2022. I don't think a lot of you guys know this. We haven't even hit all-time highs yet. But the market cap is $7 billion in size. Now, DJT does not make a lot of money as far as the company. And it's 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 doing well now because Trump is in office. But as far as a company that other companies want to invest in because of the numbers that they're putting up profit-wise, they're not showing those types of numbers. So this stock is purely a momentum stock. One of the I wouldn't say one of the best, but if you're talking about a meme stock and a stock that really goes off of momentum and not what the company is actually doing, and I'm not just saying that because I dislike Trump. That's just a known stat. Like the company just don't make money. You can go look it up. To be honest, let's go ask Joe GPT because a lot of the times I know people become really, really biased. But if you really want to know why DJT is not making money, you can literally ask it. Watch. Why is DJT, the stock, going down? And this is so that I don't seem biased when we're talking about some of these particular stocks. And as you can see, Ask Joe GPT is going to tell you the truth, right? Transfer of ownership stake. President-elect Donald Trump transferred his entire $4 billion stake in the company into a revocable trust managed by his son. Okay. Market volatility, financial performance. The company's financial health has been under scrutiny. In June of 2024, it reported revenue of $836,000, a nearly 30% drop from the previous year. This company is making 30% less than it did the year before, even though Trump has been in the limelight. That's not good performance wise for the stock. And it has a net loss of over $16 million. All right. So if if you want to remain neutrally biased, I would use Chat GPT or a GPT to fact check, certain stocks or certain things that are in the media. Okay. Very good stock though. You know, performance wise, it did what it needed to do all the way up until the election. And now people are taking advantage of it and taking profit. All right. That was DJT. All right. Let's look at, sorry. All right. Zeus Oklo as a swing trade. You got me on this one. I've never heard of this company. So when if I don't know what a company can do, I'm going to always go to the Oracle. What is Oklo? And Ask Joel GPT is going to give me the answer. It's telling me that Oklo is $22 a share. Oklo is an advanced nuclear technology company based in Santa Clara, California, founded in 2013. A lot of these quantum companies were all founded in that 2012, 2013 period. Interesting. In May 2024, Oklo went public. So it went public, guys, this year. So it's not it was created in 2013. They didn't go public where we can buy shares into the company until May. Cool. That's interesting. Let's look at the chart. All right. Charts all over the place because it's new. So instead of looking at a week chart, let's go ahead and look at a clean day chart. So when we look at the day chart, now here's something that you're going to like. 200 days angled up, so that increases your luck. And it started to go down in price, and it started to break a trend, and it's going blue on the TTM squeeze. This is the type of companies I like to buy for a short-term trend. That means 10 days, 7 to 10 days. If I'm using a day chart, I'm looking for trades that are 7 to 14 days out, not 7 to 14 weeks. I would use a week chart for that. If you're looking for trades that are 2 or 3 months, why are y'all using a day chart? All right, you should be using a longer time frame for those longer trades. Literally, if you want to be in something for weeks, then you use a week chart. If you want to be in something for months, probably want to use a month chart. You want to be in something for days, probably want to use a day chart. All right, we're going to simplify things now. All right, we're going to make everything simple so that everybody can understand. So it looks like a good short-term buy, and as you can see, it's up 7% today. I like to get in within 3 candles for a 10-day trend, and as long as it's not at its all-time highs, I would take that particular trade. So I got to see what my percentage would be. If I was to take this trade and it's at $21 and it can get to 28, that means it can move $9, guys. That's almost a 40 or 50% return. This is how it looks when you want to buy it. So I'm pretty sure Zeus brought this up because he kind of understands the what would Joe do method. And as you can see, this is a trigger for one. All right. Please don't run out there and buy it because it's already up 7%. Maybe it pulled back a little bit, but you can see the 513 forming, and you can see the squeeze going bullish as well. So that's a pretty good chart right there. Uh-oh. Oh, are these new questions? Oh Lord, let me scroll to the top. I think I might have scrolled past some questions. I need an assistant. All right. Hold up. Okay, now we got that. We're doing it in order. All right. Oh, somebody's asking Deflon Wilson Sr. to tap in. All right, we already looked at Novo Nordisk, Zeus. So you probably want to go back and look at the replay, but we talked about NVO. All right, looking at the semiconductors. Yo, this is your second one, man. I can only show. I want to show everybody one stock, and then if I cover everybody's stock, I'll come back and do a swing by. But let's see what you were talking about. Looking at the semiconductors, AMD is at the 618. NVIDIA has bounced off the 382s. So it sounds like he's using the Fibonacci retracements. Separate times. SMCI is getting hammered and can still go lower. TSM can only run for so long. You shorting semis yet? Nope. I'm long semis. All right. Well, it depends on what now here's my philosophy. All right. Bulls make money, bears make money, pigs get slaughtered. You even hear Kramer say that all the time. If I'm buying, so what I like to do is I don't short great companies. So you're never going to see me shorting NVIDIA. Now I'll do it intraday. Like if I'm going to get in and out the same day, I'll short a good company like an Apple or Amazon or Google. I'm not going to swing trade and short any company that's great. All right. Anything that has a 200-day or 200-week moving average that's angled up, or I'm not going to short. Now, however, that doesn't mean that I can't short certain companies in the semiconductor space. So maybe I won't short an NVIDIA or an AMD. Well, even though AMD is kind of neutral, I'm kind of biased on AMD because I am thinking about buying it long term. But, I might short something like a SMCI. If the 200 week if the 200 week is angled down, that's going to give me more confidence to short these because you have a very broken company that might not recover for a year or two. But if that 200 week and that 200-day moving average is angled up, it's going to be really, really hard for me to short that space. But I'll literally go on ChatGPT and ask it, what are the most terrible bearish companies, that are semiconductors? And it'll give me a list of companies. And then I'll take that list and I'll take the worst out of the best, and then I'll try to short those particular companies. So hopefully I was able to answer that question for you. The semiconductors are looking a little rough right now, but as soon as Nvidia turns back around, the semiconductors can get right back on the bandwagon and go up in price. So you want to be careful because they will blow your heads off because that's just what they do. All right, TLN invest. All right, TLN. TLN is Talon Energy. All right, so this is the first energy play that we found today. All right, now energy has been going down in price. I don't know why it is. The energy companies, oil, we're pumping more oil in America right now than we ever have in the history of the country. Trump is supposedly a oil president. So it's interesting to me to see that oil is going down in price and energy is not doing that well unless it's nuclear energy. But forget what I'm saying. Let's use our eyes to look and see what's going on. Now, Talon has a 200-day moving average that's angled up, but short term, it has a 513 cross to the downside. So you have to expect some short-term pain until we break this trend back to the upside. All right. It had a push to all-time highs. You never gonna find me buying a stock at its all-time highs. I love stocks like this when they drop 20% and then start to go back up. I love them when they drop to the 200-day and then skip to the upside. So I'll just remain real patient. This is how I would like to trade something like a Talon, which, this must be new too, because I should have a 200-day moving average. We just saw it. Yeah, here we go. Let me just pull up a clean one. All right, so it hasn't touched the 200-day yet. So, it's up in the stratosphere. And because it came out in 2022, you're not going to have that much information. But you see how this company is all the way up here in the stratosphere? I'll hold off. I'll hold off as an investment for now because I'm not buying things at their all-time highs. Now, what I will do is use my eyes. What does my eyes see? Well, my eyes see that it dropped from here to here and it dropped from here to here, right? So that's important because if it dropped that much, it's going to tell me about how much I can probably get it on sale. It dropped there, 29%. It dropped here, 25%. So guess what? I'm going to buy this when it drops 25% or more. 25% is going to put you way down here at $170 a share. So I'm not even thinking about buying this stock unless it gets down to this 175 area. Maybe I'll consider it then. Or if you're a really good technician, you can use both numbers. I want it to drop 25% and I want it to hit this trend line. Let me just do a clean chart so we can see it a lot clearer. Y'all see how I can connect these lines? I want it to drop 25% and I want it to connect to these lines, which it looks like that's what it's doing. So if it can get here or if it can get down here to this 175 area, if you want to buy it, you can buy it in this little range that it's in right now, long term. Because remember, he said long term. Ali or Ali. Sorry if you're that says AKA. I'm sorry. He is a she. All right. And maybe I don't know what your pronouns are these days. And I'm not trying to be funny. It could drop. Okay, it's around 18% off now, 16% off now. So if you want to buy something to 16% off, that's not bad. it had been dropping 19, 20, 24%. So it's right in that little range that if you think that it can hit here and then blast off, go ahead and buy it. But because the 200-day moving average is so close, you have to consider that it might get down here. So I tell people, if you buy it now, are you going to buy more when it hits here and when it hits here? If the answer is yes, then I'll go ahead and buy. If you can't stomach a move that can come to this price or this price, I'll say hold off for a little bit, because you can wait until it comes down. And then if it starts to ratchet back up, you're going to see it go green on the chart, just like this. You're going to see the momentum start. And then as soon as you see one or two candles and you see one or two candles here, then you want to be in that trade to the upside. All right. Good question. Kim says, hey, Joel, what do you think about lunar prospects long term? All right, let's look it up. Lunar Intuitive. Oh, I've never heard of this. I was thinking that it was a different company. So Lunar, are you sure that's how? Okay. Lunar, it's up 6% today. Let's look at a clean chart. Looks like this stock used to be 136. It's now $13. Ugh. You know, I don't like companies like that, because I'm like, why did it lose so much money? It lost like 90% of its value. Now, what I usually do when I see a company like this where it used to be this high and it's this low, it kind of screams like there's too many red flags that are there. So what I like to do is I like to consult the Oracle. So I go to the Oracle and I say, what is Lunar and why are people buying it? And let's see what the Oracle tells us. The Oracle tells us that Lunar Intuitive Machines is a leading space in exploration. Okay. So for like lunar infrastructure, all right, think of like SpaceX is about to, Elon Musk company is about to go public. Blue Origin, I think that's the name of it. They're supposed to be going public. All right. So as you can see, it has several factors that contributes to the recent surge. Significant NASA contracts. Ooh. So NASA now has a contract with this particular company to create, I guess this is what, lunar services. Okay, so NASA has a contract with them. They have a strategic partnership with John Hopkins. All right, so this all sounds promising. I also want to know what the market cap is of the company. So what is the market cap of Lunar? The market cap of Lunar is, because I need to know what the size is. It says that it's $1.9 billion in size. Remember, guys, 1 billion is a baby. So 1.9 billion is literally that sweet spot that I love to invest in speculative companies. It's still considered speculative because of where it came from. All right. So be careful if you buy a stock like this. Anytime a stock is that small and it came from a price that was that high, you're going to see ridiculous volatility. You're also going to see a lot of beta. So I also like to ask, what is the beta of Lunar? The beta is going to tell you how much it goes up or down. Anything more than 1 is a lot. Anything over 2 or 3 is just crazy. And as you can see, the beta is 2.6. That's like in MicroStrategy range. So this stock moves. So be careful when you're buying this. It can be up 30 or 40% one day, down 20, 30% the next day. So what I tell people to do is there's nothing wrong with buying something that's volatile like that. But if you can't stomach the volatility, then cut your investment in half or cut it into tenths. So if I normally would invest $1,000 in something like this, invest $100, right? If you normally invest $10,000 in an asset, throw 1,000 at it. And then if it drops 40 or 50%, then you can throw another 2 or 3,000 at it. But I'm going to leg into something like that, especially when it's volatile like that, so that when I finally get to catch it, go to the upside, I can put my stop at break even, and I can take advantage of the momentum to the upside. So that's a good one. Misty, short-term day trade, but I don't see which stock. I know you probably mentioned one earlier, so let me go see up top. Oh, for NVO. Okay, we'll look at that. So NVO for short-term day trade. All right, so let's get into day trading. We haven't talked about day trading. Day trading is getting in and out the market at the same time. A lot of people love day trading because if you have a lot of capital, and a lot of you guys are doing it through options, I'd rather you day trade trading the futures market because you can get in and out of it a million times unless you have over $25,000. It's just that options are very, very hard to get in and out of the same day. And if you don't have 25,000 in your account or a cash account, you're not going to be able to trade efficiently because you're going to want to be able to get out and get in. And then if you take too many trades, then you're going to get labeled a pattern day trader and you're not going to be able to trade that account anymore. So I rather you guys have, depending on your risk tolerance, I rather you go the stock route or go longer trends. But if we're, and I'm just assuming, I'm not saying that you're day trading in VO. I just know that a lot of people are using options to do that. So let's go to NVO. When I'm day trading, I'm going to look for, now before we even look at this, I want to know what the average true range is. So I need to know how much this stock can move in a day. As you can see, just looking at my charts, just using the Ichimoku, this was bearish, right? So early this morning, I would have known to be bearish at least at the beginning of the morning. All right. Why did I know that? Because this is angled down. If it's angled down, I don't want to be around. When it's angled up, then I can increase my luck. Hold up. I can hide this. Oh, dang. Hold up. Sorry about that. Let's go back. All right. So NVO. I'm going to use a 5-minute. That's what we're looking at. And if I was looking at NVO, pull up my special box over here. I think it's under my stock star list. Yep, NVO. Its ATR is going to be 4. So I know that NVO moves $4 a day. So I want to try to make $2 to $4. So I'm going to use a 5-minute chart. Actually, it was bearish and then it turned bullish right around 940. What do you notice here? Very easy. This is how I would have traded this. I would have seen this 513 cross. I would see it going blue. I want to get in within 5 or 6 candles. I would have been in this trade somewhere around here for $82. Now, I think that it can move $4. That means if it's at $85 now, I want to go to the lows of the day. When I go to the lows of the day or the morning, if I know that it's going to move $4 a day, then I want to make $4 to the upside. So if it's at $81, everybody and their mama knew that it was going to 85. A lot of you guys didn't know it because I don't know what you guys are using to trade. So if I know that it can go to $85 because it moves $4 every day, does it have enough room for me to make money? And yes, it did. So even if I was able to take this trade somewhere around 940, I would have been in it for $82. I would have known to get out at $85. Okay. Very easy. If I had $82,000, I could have traded this. I would have needed $82,000 to make $3,000. Okay. Most of us don't have that. So what are we going to do? We're probably going to go into the options market. And if you were to go into the options market, I can't stand buying options on the day that they expire. So I'm going to go a week out, go to December 27th. I'm going to look for the one. If I'm going to get in and out the same day, I'm going to go for the one that has the most contracts. I'll probably buy this one that's 29 cents, even though I don't think it was going to 90. All right, I'm about to blow you guys' mind when I show you this. So I'm going to look at that strike price. This is what I probably would trade. If I was taking this particular trade, that particular strike, I would have waited until it started to go green. It didn't start going green until about 11 o'clock. I would have bought it for about $13 right around here. That's when it started to go green. And you would have been able to ride it all the way up to about $44. So $13 to $44. It doesn't seem like it's a lot to you, but that was about a 216% return trading Novo Nordisk today, not knowing if it was bullish or bearish. I didn't have to look at 57 different charts. I looked at one chart. I knew what strike I was going to buy. I waited until people started to buy it. You would have been up 200%. Okay. And then it came back to zero. Why? Because trades like this are not going to last that long. If I'm using a 5-minute chart and I'm looking for 10 candle trends, I'm only really looking to be in that trade for an hour. After that hour, if that was at 11:40, look, 10 candle trends. I would have been in that trade at 11:40. I would have been out that trade at 12:40. 1 hour. 5-minute charts, 5 times 10, 50 minutes. I would have been out of that particular trade. Keep it simple. Keep it mad simple. All right. All right. Yolanda says, I am a 9 to 5 worker. I just purchased your 9 to 5 course in PayHip. Well, good luck to you. And I hope that video is helpful. Now, remember, guys, these are mini classes. They're mini classes. It's very hard to be able to get all the information. Well, you're going to get all the information you need, but there's going to be some work that you're going to have to do. And that's the beauty of my videos. They are do-it-yourself videos, but I give you enough information where if you take that information and you do the work on your own, and then you come to me with questions, you're going to get to the level that you want to get to. All right. Instead of being lazy and paying a whole bunch of money to somebody, I said, I'll go on a rant. You think if I pay all this money, I don't really have to do that much. And then I can just learn by osmosis. They can just shove that information in my head. And then all of a sudden I'm a day trader. No, you guys need to do the opposite. Put in the work. I kept the prices low enough for you to get what you need. Now it's your job to set up your charts, go on there and learn how to do trend lines and support and resistance levels. Be able to watch my live videos and understand every single thing that I'm talking about. And then you'll be surprised at how easy buying and investing and day trading and intraday trading is when you simplify everything and stop making things so complicated, which is why I created the 9 to 5 method. All right, this is a very good question. TJ said, do I use the 200-day EMA or the 200-day SMA? Very good question, because there are two different ones. My philosophy is that it doesn't matter which one you use as long as you're consistent. One is not better than the other. Sometimes and you'll have people do that. Joel uses the SMA, but guys, come and take my class because I use the EMA and it gets you in just a little bit earlier. And I'm like, no, it doesn't. Sometimes the SMA will get you in early. Sometimes the EMA will get you in early. You just got to be consistent with the one that you use. And as long as you're consistent, you're not going to be able to follow along with me. So if I'm looking at a chart and you see a setup from one of these videos, you're going to have to pull up your charts and see if the same setup is there. All right. And we have that a lot. Some people will say, hey, Joel, the 513 didn't cross on my chart. I don't want you to change what you're doing. Just be consistent with whatever you're using, and you should be fine. Okay. Good question though. All right, XRP. XRP. You down with XRP? All right, so XRP is Ripple. Why do I love Ripple? And not Ripple the alcohol or whatever our grandparents used to drink back in the day. Ripple, and unfortunately, you can't pull up Ripple. And maybe they have Ripple ETFs and Ripple stocks that's out now that we can look at. But Ripple is a cryptocurrency. All right. A lot of people love Ripple. So you know what? Anytime that happens, I like to go to the Oracle. All right. So we're going to pull up Chat GPT. So when I pull up Ripple, XRP is going to tell you what it is. So XRP and Ripple is the same thing. I think XRP is the company or the blockchain, and Ripple is the coin that moves on the blockchain. I might be wrong, but they're the same thing. My very first crypto investment was XRP. So back in 2018, when I decided to buy crypto for the very first time, I took $500 and I bought XRP. And it was right around this time. I remember it was right after Thanksgiving. And within 30 days, and if you go into the, I think if you go into the insider trading room, type Ripple, XRP, Joel Harrison, whatever, it might pull up that receipt from 2018. I spent $500. That asset was worth $7,500 in 30 days. I took that $7,500 and then I put it over a whole bunch of other cryptocurrencies. And then I think at that particular time, maybe that $7,500 came down till about $6,500. And then I took $5,000 because I remember at that particular time in the future, Bitcoin was $5,000 a coin. So I used Ripple to increase my 500 to 5,000. That was a 10x. And then I took that 5,000, bought Bitcoin, and I said, I want to do the same thing. I want to get 10x. I want to put that 5,000 into Bitcoin. And when it becomes a $50,000 coin, which it did 3 years later, I'm going to sell it. And I did do that. So I bought Ripple for 500, rose to 5,000, bought a Bitcoin for 5,000, rode it to 50, sold it, paid taxes on it, which I was mad about. That was 2021. Use the charts. 2024 comes up. I see Bitcoin starting to run again. I get mad because I can't get in it. The VIX goes above 50. Bitcoin finally drops back to 50, which was the original price that I sold it for in 2021. I get into Bitcoin on August the 5th. I actually bought two that day. Long story. I bought two that day and I got shook out of one of them, but that's fine. I still held on to one. And then that 50,000 rose to $100,000 by now. All right. So I literally took a $500 investment and turned it into $100,000. All right. So that's the long story behind Ripple. But let's ask Joel GPT, what is Ripple? What is XRP? And what is the market cap of XRP? Very important because a lot of people said, Joel, how did you know? Oh, here we go. XRP, guys. This is the question. This is Ask Joel GPT. XRP is a digital currency that operates on the XRP ledger, okay, which is the blockchain. And then it uses Ripple as the coin. All right. A lot of banks like using this. So a lot of my friends, I can't reveal their names, but they were in China for about 60 to 90 days. And a lot of them were involved, because they were in finance, they were talking to a lot of banks that are in Asia. And when they came back, they were like, yo, Joe, you would be surprised at how many of these banks are using XRP to do international transfers. And I was like, worried. They were like, yo, just about all of these Asian companies have a part of their banking system that's using the XRP ledger because they can send money to and from internationally and they don't have to go through the same banking system that they're already involved in. And I was like, well, hold up. There are banks out there right now that are using cryptocurrency. They were like, yeah, like just about all of them. So then I went on Chat GPT and I started asking it. I started saying, hey, why is XRP rising in price? And of course, it said, oh, because these banks, these big banks that you hear about all the time, are starting to invest and starting to do transactions in Ripple. And that's why you guys are seeing Ripple. So when you think of Ripple, I want you guys to think of there are different types of cryptocurrency. Like Bitcoin is more like gold. It's like a store of value. But companies like Ripple, it's not really about the money. It's about being able to transfer money here and there. If you notice here, it tells you that the transactions on the ledger are like 3 to 5 seconds. So imagine being able to send 10 million, $100 million in like 3 to 5 seconds from here to somewhere in Japan or China. That's what you get with cryptocurrency that a lot of you guys are missing. The regular financial banking system is like super duper slow. It's just like phones that have cords that are connected to the wall. And now you got cryptocurrency that's just like these cellular, it's like AI. And when you think of it like that, that crypto is like the AI of finance and that regular finance is like dial up, you'll start understanding that, oh, it's not about the dollar being taken over and we're using Bitcoin as the new currency. It's how you transfer those funds to and from people. That's the beauty of cryptocurrency and the blockchain that a lot of you guys are missing out on. And we're funding it with our funds to allow this thing to work. It's almost like, imagine if you created a pool, but there's no water. And they're like, you got all of these pools that are dug out everywhere. That's kind of like what the cryptocurrency space is. And because we provide the water to the pool, we're going to be able to take advantage of the whole blockchain space. Anyway, so to answer your question, I really do like XRP. But what you guys need to know is how big and how large XRP is, because a lot of you guys don't know. And I thought I asked the question. Oh, I didn't hit enter. What is the market cap of XRP? See, when I bought Bitcoin, guys, for $5,000, so many of you guys were so focused on $5,000, you decided that you weren't going to buy one because you're like, why would I buy something that's $5,000 that I can lose? And I wasn't thinking of it that way. I was thinking of it like at that particular time when I bought a cryptocurrency, a Bitcoin for $5,000. At the time, Bitcoin was worth $100 billion. And a lot of you guys didn't know that. And they're like, you hear too many people say that it's worthless and it doesn't have any value. Oh, it has a value. And the value at that time was $100 billion. And they want Bitcoin to equal the price of gold. Gold is worth 14 trillion. So when I bought Bitcoin and it was $100 billion, my goal was to sell it when it got to $1 trillion. How did I know that it can go to $1 trillion? Because Apple had hit $1 trillion, Google had hit $1 trillion, Amazon had hit $1 trillion, and that was just here in America. Crypto is global, so $1 trillion ain't nothing. So when it finally hit $1 trillion, it went from 5,000 to 50,000. Why am I holding it this time? Because if gold is worth 15 trillion and now Bitcoin is worth 2 trillion and you can't say that it's worthless anymore. Well, we almost at 15 trillion now. So if Bitcoin goes from 2 trillion to 15 trillion, that means I make 7 times my money. That means if the Bitcoin is 100,000 right now, it should at least be worth $700,000 in the future. And that's how you break down an investment and why you think you should buy it. And its use case is so that you can transfer money, or it can be a store of value, not so it can take over money. It's so that it can make money a lot better. It's just a digital store of value versus the tangible, which is your gold. One day you guys will get it. But XRP, why didn't it give me the answer? Oh, XRP's market cap is 57 billion. So think about that. If XRP has a circulating supply of $57 billion, that means I can't send $100 billion on the XRP network. Think about that. If a bank only has $100,000, it can't send $100,000 that day because there's other people that have money in the bank. It can probably only send about 1% of that. That's how the crypto space is. If globally $1 trillion is being circulated on a daily basis, Bitcoin has to be more than $1 trillion to be able to handle all the transactions. You're getting paid off of not facilitating, but putting that money into the space so that the blockchain can run. So hopefully you guys are starting to understand a little bit about how this works. Ripple is worth 57 billion, right? So they can send maybe 500 million or $10 million, and it doesn't really hurt the space because they're not using up all the supply that's there. The bigger the supply, guys, you're not going to see these big moves like 3% and 5% and 8%. All right. And that's what crypto is trying to do. It's a lake right now that's trying to become an ocean. And once it's as big as the Pacific or the Atlantic, then you're not going to see it move that much anymore. And then you'll see people trust it a lot more. All right. Great. I can go on and on and on about XRP. All right. Eric said, looking at the semiconductors. Oh, this was the same question from earlier. Oh, that was Eric. All right. Looking at the semiconductors, AMD is at 618. NVIDIA has bounced off. SMCI is getting hammered. TSM can only run. So TSM is Taiwan Semi. SMCI is Super Micro. AMD is AMD supposedly was just as good as and we'll look at their charts real quick. So just pulling up their charts. This is why I was interested in AMD. AMD was supposed to be the next NVIDIA. But look at what's happening. What I do like about NVIDIA is that AMD is that it's approaching its 200-week moving average. We're really, really close. We're at 120. All right. I do think that it might come in to about 100. That's why you guys see all these alerts right here. If it gets around $100, I got to buy it because if it used to be a $220 stock and it drops to 100, I'm going to have to buy it. And that's buying it fundamentally, not technically. All right. 220 cut in half is 113. That's only $7 away. If you can buy a stock like this 50% off, that's great. And great companies like this will fall 50%. Guys, NVIDIA has fallen 50% 10 or 15 times in the last 10 years. So it happens. And then all of a sudden, Wall Street falls in love with it again. After everybody takes their money and their profits from these other companies, they start rolling it into companies like AMD. All right, so be careful because it still might have some downfall. But look, the 200-day is angled down, so it might take 200 days to turn this around. And that's when I started to say to myself, oh my God, I might not be able to trade AM or hold on to AMD anymore because now the 200-day is angled down. So now the best moves are going to be to the short side. So anybody that was able to take a short right here, 1, 2, 3, what I teach, you would have been able to make a lot of money. And that's about 4, 5, 6, 7, 8, 9, 10. I teach 10 candle trends. There go your 10 candles right there. All right. If I was to look at something like Taiwan Semi, Taiwan Semi is dang near at its all-time highs. I'm never buying anything at its all-time highs ever. All right, I'm gonna wait until it comes into the 200-day. Let's look at SMCI. SMCI had a 200-day moving average that was angled down. When it's angled down, I don't want to be around. I don't care how much money I'm losing on it. Because what a lot of people ended up doing was, once it started to go up a little bit, they took those profits, probably rolled it into Broadcom. But the charts right here are telling you that this is bearish. You see how this 513 cross happened right here to the downside? This is red. This is red. Y'all see how I don't have to go through 20-some charts to see this? Short term, it's probably going to go down for 10 days. Because if you're looking for 10 candle trends, oh, you can't see it. Let me move that. Sorry about that. That's how it looks. Let's go back to AMD so that you guys could see it because Eric's was in the way. That's how it looked. There was a 513 cross right here, which means short-term bearishness. On the week chart, though, the week chart is still angled up. That means that AMD is still good fundamentally. Now, if this 200-week chart starts to turn down, then there's something wrong with the company, and I can't buy it. All right. All right, let's get to Tesla. Tesla intraday options. All right, so let's say you were interested in trading Tesla and you wanted to trade it. He said intraday. So that's for your day traders. So very first thing I'm gonna run and do is I want to go and see how much Tesla moves up and down on a daily basis. Tesla's ATR is 23. That means Tesla roughly runs about $25 up and down. It either runs up $25 or down $25. All right. So I already got a cheat sheet. It runs $25. Great. Now all I need to know is if it's bullish or bearish that day. I don't care what chart you look at. It doesn't matter what Tesla did yesterday or the day before. When I wake up, if I want to intraday trade something, I have a neutral bias and I literally say charts tell me what to do. If the charts tell me to go up in price, then I'm going to go up in price. What does this 20 look like it's going in? Up. So why do I want to trade it to the downside? Because I hate Elon. That's why, Joel. Well, that could be a strategy, but I'm not going to take that strategy. If this 20-day is angled up, if this Ichimoku is angled up, I want to increase my luck. I want to trade it that way as long as $25 hasn't already been made from the lows. Giving y'all $1 million worth of information for free. Here's the lows. We got a cheat sheet. What's 410? Joe, what's 410 plus 25? 435. What price are we at? 439. We knew it was going to go at least $25. Joe, I've taken so many day trading classes and nobody has ever told me that there was an average move that Tesla moves on a daily basis that's calculated over the last 14 days with volatility. Word? I've been talking about this for at least some years. Where you been? How are you trading? Anyway, it's going to the upside. I want to catch it after 9:45. I don't care that it's red right there. The Ichimoku was pointed up, so I'm trading up. I don't care what y'all say. I don't care what you researched. Tesla's going up. Or I'm sorry, I'm going to trade it when it goes up. I literally just said, ooh, what color is this? Green. Ooh, what color is this? Blue. I guess I'll take a trade. Has it run to 445 yet? Nope. Then I'll ride it until we get there. Oh, what was 445 or was it 430? What was the amount? I forgot that fast. What was the lows? The lows was 410, 25, 435. Has it got to 435 yet? No. Then take the trade. We're at 427. I could still make another $7, $8. All right. So if you were to take this trade, the swing high was 431. If the options world tells me that the 435 strike, sorry, that says Novo Nordisk. Were we looking at Tesla? Yeah. Okay. All right. Back here again. I'll take a trade somewhere around here, around 427, 428. But I'm going to buy whatever everybody else is buying. Ooh, everybody is buying the 440 strike. Ooh. You would have known everybody was buying the 440 strike at 933. You wouldn't have known at 259. You would have known at 933 what everybody was buying. Look, a lot of people were buying this strike way out here too. So this probably would be the one I would buy. I would have gotten in sometime around, what time did I say? Right around 10:10. Let's see what it did at 10:10. Oh, 10:10. If my chart is green at 10:10, I'm buying. If it's not green, I ain't buying. At 10:10, what color were these candles? Green. Did it matter if I bought it for 180 or 140? Well, Joe, that's $40 difference. It does make a difference. You got to be specific in your entries. No, I don't. I don't care about that. Is it green? Yes, then I'm buying. I don't care what price it is at that time. I would have bought it for 180. I would have bought it for the worst price. 183. This bad boy went to, remember, I'm only going to trade for an hour because I'm using a 5-minute chart. I'm only looking for 10 candle trends. All right. That's a 72% gain right there in 7 minutes. Oh, look at that. You would have been able to make, using the what would Joe do method, you would have been able to make a killing. Jeez, why didn't y'all call me to take this trade? I'm kind of mad now. I'm sitting here making videos. You could have made a 300% return. I think it's more than that. I can't, the number's so big, it won't even fit on the chart. All right. We would have been able to get into this trade somewhere around 183. This bad boy ran all the way to $7. That's right, guys. 183 to $800. Jeez Louise. We would have known what strike to buy because everybody else was buying it. We would have known that there was money to be made because it hadn't reached this ATR yet. It reached its ATR and kept going. Why would you stay with it? Just because it reaches its ATR, the trend is your friend until it ends. That bad boy didn't end until right there, where this started to go red. Okay. You would have been in this trade at 10:10, out of this trade by 10:40. That's a 30-minute trade. And you would have made a 375% return. Now, how many of you guys are making those types of returns? I'll see y'all pop up with something, but I'm like, y'all obviously ain't using my method because these percentages are easy to make on this particular. And what's crazy is that the actual option is down, but we're not thinking about what happened the day before. You guys got to get specific on what chart you're using. I trade the 5-minute because I noticed that the market only trends for an hour. So I did the reverse. I didn't try to outsmart the market. I let the market tell me where to make money. If I notice that there are hour trends in the market, and you can do it on any chart, you can literally draw the line and see how long it takes. I was like, yo, the market only really trends for an hour every day. 10:30 to 11:30 or 9:45 to 10:45 or 2 to 3 or 3 to 4. It's going to be an hour. It rarely just trends for 2, 3, 4 hours. An hour is how much it's going to trend on average. Well, if it's going to move an hour, if I know that the market trends for an hour and I know that markets trend on average 10 candles, that's just math. 10 candles times 5 minutes is 50 minutes. So that's why the 5-minute chart became my go-to for day trading or intraday trading. And as you can see, a lot of these trades, I mean, it didn't even trend. I mean, it trended from, if I was to take it all the way up to, no, that's the highest that it went to. You know, that's a pretty decent amount of money to make, you know, in 15, 20 minutes. But I was willing to wait from 10 o'clock all the way to 11 o'clock. All right. But sometimes you get that money way faster than what you're expecting. I didn't need 15. I didn't need this chart to show me the bias, and then this chart had to line up with this chart to line up with this chart to line up. Like, y'all are killing me trading that way. I'm in there very quickly. How much does this thing move? Is there bullishness there? What is everybody buying? You see how I'm not choosing anything? I'm letting the market choose everything. What's the trend? I don't know if it's up or down. Oh, that's what it is. I'm going to take that. What option is everybody buying? That's the strike I'm buying. Has it moved what it's been averaging every day? If I look up and Tesla's already moved $25, I ain't taking that trade. Y'all are. Why? It only moves $25. You think it's about to run 75? You being unrealistic, and then you wondering why it's reversing on you. Because I don't know what fundamentals y'all looking at. I know I'm ranting and raving, but you guys got to be really specific on what you guys are using. All right. I'm gonna try to breeze through the rest of this stuff. All right, we looked at the SPY earlier, Crystal. I know you came on a little late, but we looked at the SPY, I think, first. All right, SoFi and Palantir. Very good. I don't know what time frames, but I'm just gonna assume I'm gonna pull up anytime I see a stock with nothing on there. I'm gonna pull up the 200-day moving average so that I can talk to everybody. SoFi, guys, has a 200-day that's angled up. You want to increase your luck, but we got a 513 cross right here that's bearish. You might get some short-term bearishness. That doesn't mean go and sell everything right now. Okay, you do have a 200-day moving average way down here at 878, and the TTM squeeze is starting to go red. Let's look at Palantir. Ooh, I earned a 332% return on this bad boy. But let's look at what's happening. Guys, never buy at the all-time highs. Never buy at the all-time highs. I don't care how much you love this company and how much money Joel has made. Wait for this bad boy. It's going to pull back 50% at some point. It might get to $40. You better hope it hits $100 first before it pulls back 50%. We probably going to see 50 or 60 at some time because all stocks are going to see its 200-day at least once within the next year or two. All right. So it's probably going to see $30 or $40 at some point. So if you're in it, hold on until you see a 513 cross to the downside. I think I'm already completely out of all of my Palantir. I went ahead and took my profits. All right, Snap. Snap is a good one. My kids just bought more Snap. We were looking at their portfolio the other day, and I think they're increasing their position in it, especially with TikTok maybe getting banned in January. Now there is short-term bearishness in Snap. 200-day is angled down, so you don't want to be around. So once the 200-day started to angle down earlier, actually August of this year, kind of wanted to stay away from it. But as an investment, you also see this. This is ugly. You do not want to see a 200-week moving average angle down. That's not good. But what I do like about Snap is that look at how long it's been basing. Anytime there's a thing they say, the longer the base, is it the wider the base? I forgot the saying. But basically, if this can go sideways for this long, then when it starts to go up in value, you're going to see a spike like you've never seen before because it can't break. It won't break $10. It's literally like $10 is the support. $10 has been $7 has been the support for Snap ever since 2022. So you got a 10-year support area, right? So if this bad boy starts to turn around, I actually think it's a pretty decent investment right now. ASML, which is another semiconductor space. Semiconductors are just taking a break. They've run so much this year. You got to take profits. ASML touched its 200-week moving average. That's when you're supposed to buy it. Look, buy. This when you're supposed to buy it for a long-term investment. But if we were looking at it short-term, the 200-day is angled down. Ugh. So you might get some short-term pain maybe for 200 days. When this starts to turn around, guys, that is not good. It takes a catalyst to get this bad boy to turn back around. All right, CHP. Oh, ChargePoint. I haven't heard about ChargePoint in a minute. I don't care for anything that's involved with electric cars. Electric cars have lost so much money for so many people, except for Tesla and for Chinese companies. They're the only people that are profiting off electric companies. ChargePoint is now, I mean, the 200 day is angled down, the 200 week is angled down. You just want to stay. I want to see what the month chart's doing. Like, this is just, I mean, this is just awful. This is just completely awful. And I mean, this company might go bankrupt. All right. So be careful watching this. You should have been out of this trade a long time ago. Look, I used to be a big believer. If you watching in my old videos, I used to be a big believer in this company because it was making decent money back in, think about it. You go back to 2020, this is what we were talking about. Look, 200 day was angled up. 200 day was angled up. When should you have stopped buying ChargePoint? When did Joel get out of ChargePoint? Well, that's September of 2021. And look, the 200 day has been down ever since September of 2021. Ugly, nasty. Look at that. Awful. Get out. Sell it. Well, it's already at $1. I mean, the lowest it can go to, Joel, is a penny. I might as well just hold it. All right, it's up 9%. All right, add to it. All right, so this might be the bottom, but it has dropped a lot in price. I don't like any of the any. Shamika says she got in early on that RGTI trade. All right, we already looked at SoFi. Well, we just looked at SoFi. Jerome, that's one of my golfing buddies. You were thinking to sell that RGTI? I mean, it's at all-time highs. That's when I like to sell. But I made that mistake with Sound. Sound blew through its all-time highs, which was 18, and ran all the way to 24. And I missed out on that major move with a lot of my account, which I am totally messed up about. Oh wow. Shamika said that was her ad that was on CNBC. I told y'all she doing big things. She got CNBC commercials. All right. So that's your travel agent. If you need a travel agent, y'all better hit up Shamika. All right. Freddie said Q big. The heck is Q big? Invesco Qs. Oh, it's the Qs ETF. Let's look at I don't know why it must be new because it's not really showing too much information. All right, so there's not too much information. Maybe it's fairly new, but it's looking bearish. And then I mean, it was bullish and now it's looking bearish. So I mean, it's an Invesco top Qs ETF. So it might be a fairly new ETF. ETFs are just ETFs. What I would do is look and see what companies are in that ETF, and that's going to determine if I want to be in that particular company or not. All right. Brandon said, let's look at D Wave. Do you have the ticker symbol? I can't find it. All right. If you can find the ticker symbol, hit me up. D Wave. QUBT. I think we looked at that earlier. That's another quantum company. This is the one that everybody's been buying, that's been popping. Yeah, this is the one that's already, look, I had already been analyzing it. I mean, this bad boy is all the way up here. This is momentum at its best. I think this is one of those stocks that I was telling people when it breaks to new highs, it comes back and then it starts to form a new high. All right. And now it's starting to push again. Pushed all the way to $27. It pushed back. When the stock pushes like this is what it does. It comes back in price and then it starts to go up in price. This is one of few stocks that you can buy when it hits its all-time highs. But it can't have already hit it and then drop in price. It has to form a new high and then go higher. So I would hold off on this one. But it's already at its all-time highs. I'm not buying anything at its all-time highs, period. I'm just not going to do it. I think we looked at IBIT. And sorry, a lot of you guys are on right now. This is iShares Bitcoin. All right, I like iBit, but here's the thing. It's going to be at all-time highs just like anything else. So I'm going to pull up the Bitcoin chart, the Bitcoin that I think you guys should buy. I like this ETF, but I like this one more because it follows the same price Bitcoin is right now. Okay. So I like that it's $98 or $97 because if I look up what the price Bitcoin is, probably somewhere around $97,000. This is why I bought this particular one. I bought it down here. I'm going to say it again for the 100th time for like $49.9. Okay. And was able to capture all of this move, and I'm still in it. All right. We did print a new high at 108. This is Bitcoin, and now it's pulling back. So all the ETFs are going to pretty much move the same. You just have to pick and choose which one you want. Some of them move a little bit faster than the others. There might be a triple Bitcoin that's out there. I don't know. But this one is my favorite. I don't really do pocket options, Raymond. Jamie said, thanks. I'm a newbie. I know nothing about stocks. She was interested earlier about some of my video content that's out there. If you are a newbie, go ahead and purchase that stock market for beginners. And we'll talk about a lot of the stuff. I really break down the Yahoo Finance platform. You can watch the advanced technicals videos where we talk about candlestick charts so that you kind of see and understand what we're looking at. All right, so we got a lot here. Mona said, and what's going on, Mona? And prayers out to you and your family. Can you talk about the different moving averages and whether we should be using different ones based on time frames? Exactly. That's literally what the 9 to 5 method is for. All right. There's no reason. I don't mind you guys looking at a gazillion in moving averages, right? Or moving charts. The baseline, let's look and see if I can pull up. Let me see if I can pull up I think I have one called moving averages that has a whole bunch that are on there. Let's see if I can find it. Nope, I don't see it. Oh, educational moving averages. I don't like how that looks. That's probably old. Hold on, give me a second. Oh, interesting that I don't have it anymore. I used to have a chart that had like 100 different moving averages on there. So if you are using moving averages, I always show you the 200 day. The 200 day is really what really gives you the bias of the market. You're going to hear about the 50 day. You're going to hear about the 100 day, the 50 day, the 200 day, and the 20. You hear about those a lot. The 200 day is giving you kind of bias. It kind of gives you the bias of that stock, or short term, is this a bullish stock or a bearish stock? I talk about this in all my videos. The 50-day moving average is kind of short term. So a lot of people like using a 50. Let me see if I can. A lot of people like using a 50-day moving average because it's kind of medium term. So if I was to go in here and manipulate this and make it a 50 and make it red, and usually it's the color red. I'm going to delete the 13 and the 5. Usually you'll see a lot of people play with this. So you'll hear people talk about golden crosses. So if you were to look up like we looked at the SPY already. Let's look at Apple. We haven't talked about Apple today. Let's say I was looking at Apple and I was looking for what they call a golden cross. A golden cross is when the 50-day moving average crosses the 200-day. I know I always talk about the 513 crossover strategy, but we don't talk too much about golden crosses. This is supposedly the most bullish move in the market. Anytime you see a golden cross on any chart, and that's when the 50-day crosses the 200-day, it's supposed to be a very, very bullish period for the market. And as you can see, Apple ran in price when that happened. It pulled back some and then it started to go up again. So a lot of people like using the 50-day as a measure to also buy short term. So you see how Apple dropped to this 50. You could have bought it there, made money. It dropped to the 50 here. You could have made money. You see how everybody's buying it. As long as it's holding this 50, it's still bullish after this bullish golden cross. If we break this 50 and you start seeing this 50 start to cross underneath this 200-day, it's going to look something like this. That's called a bearish golden cross, which is really bad for the market. And as you can see, when that 50 crossed that 200-day, you started to see it fall in price. So a lot of people use the different moving averages. I don't really talk about the 100. I know some people that love the 100-day moving average. They use it just like the 200-day. There are a lot of people that like using the 20-day moving average. So the 20-day, if I was to add that one, they use the 20-day kind of like the 5 and the 13 moving average. Instead of looking for a crossover for the 5 and the 13, what they'll do is they'll use the 20-day, and we'll change this one and make it yellow. Usually it's yellow in color, but they'll use the 20-day for swing trading. So now you're going to do the same thing, right? But instead of having a crossover strategy, you're going to use it to know when to buy it. You see, anytime you're above the 20, you buy it when it hits the 20. Anytime you break below the 20, you short when it hits the 20. So you see how this would have been a great buy. But then when it broke underneath here, you see how everybody shorted it right there? It crosses back over it again, it's down. So you use the 20-day as if it's underneath it is bearish. If it gets above it like this, then it becomes real, real bullish. So, it's a very simple way. If I wasn't using the 513 crossover strategy, I would throw the 20 on there, and then that makes it even more simple. I don't have to wait for a crossover. I can literally just say if we're above it, it's bullish. If we're below it, it's bearish. And then you can use the 200-day as a bias. All right, so hopefully that made some sense. TJ said Palantir wheel strategy for income. I don't know what the heck the wheel strategy is. Let's see if Ask Joel GPT can tell me what the wheel strategy is. What is the wheel strategy? You got me on that one. In stocks. The wheel strategy? The wheel strategy, it's an options trading strategy used to generate income. Oh, you got me on that one. When I trade options, I'm going to be honest with you. I'm pretty simple and basic. I buy calls, I buy puts, I buy verticals. That's it. All right. Calls, puts, verticals. I haven't learned how to do iron condors. I figured when I get a little bit older and I have some time to kind of encourage myself to learn more about the market, I'll learn about the different option strategies. But you got me on that one. You got the guru on that one. I don't really mess with the wheel strategy for income unless you're just doing credit spreads. I don't know if that's a different name for it. Let me see. You're collecting a premium, selling the put. Yeah, I'm not into the credit spread. 'Cause a lot of the times you have to own a lot of that stock to do the credit spreads. Otherwise, I've seen accounts get pummeled for it. So I don't really talk about those particular options at this particular time. But I'm glad that you brought it up. All right, guys, I'm gonna have to get out of here. It's like 3:30. I know I said I can go on forever, and usually I like to get to everybody's stocks. All right, Monique said she switched to YouTube and it's a lot better. Oh yeah, side effects is what I was looking for earlier. I'm gonna try to get to some of you guys' questions. Maybe if I drink some of this coffee, I'll be all right. Hold on. I was up all night. All right. K Love says, I am an option swing trader and I bought your 513 strategy training earlier this week. I am also a 9 to 5 worker. What's the difference between the 9 to 5 trading versus the 513 trading? The 9 to 5 training is going to teach you what type of 9 to 5 trader you are. All right. 513 is just a trigger point for the day chart and charts that are in a lower time frame. The 9 to 5 goes all the way up to like the month chart. So depending on your style of trading is going to dictate, even if you use the 513 strategy. 513 is really for I use it on the week chart, but the week chart is usually the highest that I use that 513 on. So it's similar, but not similar because the 9 to 5 worker is gonna have to learn how and when and why they're actually buying those particular asset classes. And it doesn't matter what you're buying, whether it's crypto, stocks, options, futures, what have you. The 9 to 5 is going to allow you to figure out what type of trader you are. Shelly said, did Joel answer your questions yet? I don't know what you're referring to. I probably didn't, knowing me. Oh, K Love just said, oh, okay. So I was able to answer it finally 3 hours later. All right. I'm just going. All right. K says R cat R cat. Let's look at R cat. What the heck is R cat? Y'all are killing me today. Y'all are giving me stocks I've never heard of. Red Cat Holdings. I don't know, but Red Cat Holdings is very, very bullish. 200 days angled up. 200 days angled up. That increases your luck. 200 week, though, was flat. So I'm going to look at the day chart. Let's look at a clean chart so we won't confuse too many people. And as you can see, it's starting to go up in price. The squeeze is still a little red. 200 days angled up. 1, 2, 3. You can buy this to the upside as long as it's not at its all-time highs, which I don't see. Oh, well, dang, its all-time highs was way up here. So it's starting to make a move. I don't really like companies that used to be, think about it, if a stock was $220 and now it's $9, you're dealing with what we call, like, usually there was something illegal that happened. Like, why would a company be $220 and it dropped to 9? I know it sounds like, oh, the stock price just fell in price. You don't understand. That's market cap. That's like it's like $100,000 house being worth 10,000 one day or 1,000. Like, something is wrong with the house. Like, am I going to open the door and there are going to be bodies everywhere? Like, there's something wrong with the company. Now, it doesn't mean that it doesn't have a catalyst to do something now. I don't like beating up on you guys as companies. It's just that when I see something like that, the red flags always go off. Something went wrong accounting wise that made this stock drop. Now, can the company start going up in value again? Yeah. But I also want to know what the market cap is, because just because the company has a $10 share price doesn't mean that it's not a penny stock. So the definition of a penny stock is anything that's under $1 billion in size. And more than likely, I'm not really supposed to show it. So this just barely is getting to that $1 billion mark. So I wouldn't get in trouble if a lot of you guys start buying it. But if it was like $80 million, with the amount of people that are watching this, we could push a stock up or down. So, watch this stock closely and see what's going on with it. All right. Shelly says, is the 9 to 5 training different from your new one? Yeah, it's slightly different. It's probably 75% the same stuff that So for you guys that don't know, I was doing 9 to 5 1-on-1 consultations the whole year with individuals. So I did add a couple of charts and I tightened it up a little bit. So you definitely want to buy it, especially at the price point that I put it at. I wanted to make sure everybody was able to grab that particular video. All right. Uh-oh, it's not letting me. Here we go. All right. Can we look at Nike on the weekly? All right. So Nike sounds like it's starting to turn around in price. I've been loving Nike go. I've been loving the fact that Nike is going down because I own the other retail companies that it has to compete with. So I own On Holdings, ON. I probably got about 50 pair of Ons. All right, that's what happens when you get older. All you do is buy shoes, Jordans and Ons. That's all you see in my closet. The 200-day is angled down, so I don't want to stay around. So anybody trying to swing trade this to the upside, do it very, very fast, 7 to 10 day moves. You see how when it started to move 4, 5, 6, 7, 8, 9, 10 days before it dropped, 10 days before it dropped, 3 days before it dropped. It's going to be real fast moves. 10 days, then it dropped. Now it's dropping again. Okay. So be careful when you see something like this. The 200-day is angled down. You don't want to stay around, but the week chart also started to turn down. This is why it started to lose love on Wall Street. Because when anybody sees this fundamentally, that means something is wrong or the competition is increasing. So that's why my kids don't own Nike anymore. I don't own Nike, but we all own Deckers. Y'all see, you go to the airport and use your eyes. Stop using your ears. What do you see everybody wearing at the airport? When you go to the airport, look at everybody's shoes. 30% of the shoes are going to be Hoka's. The other 30% is going to be Ons. Hoka and Ons is all you see across America. All right. So those are the companies that we own, and we've been doing very well in those companies. And those companies are taking market share away from Nike. Someone asked, is GPT free? Yeah, Ask Joe GPT is free. But in order to get access to Ask Joe GPT, you got to go through Chat GPT. So if you're able to get Chat GPT for free, then you'll be able to pull up Ask Joe GPT. All right, we looked up Snap already. Micron got hit really, really hard lately. So we've been looking at a lot of semiconductor companies lately. And that's because semiconductors, excuse me, hold on. Sorry about that. It's like a fly flew down my throat. Woo. Anyway, so a lot of semiconductors have been getting hit lately. Your AMDs, your Microns. And I mean, Micron is near the 200-week moving average. So you got to buy it long term when you see it hit the 200-week. Even on the 200-day, the 200-day is still angled up. 200-week also angled up. So it's still a bullish stock. So long term, that's what you want to buy if you're looking for a long term buy. Or you can sit back and wait until it looks something like this. It's going to hit its 200-week. You're going to see a 513 cross, and then it's going to go green. Maybe get in then. Or, like I said, if it's a 2 or 3 year hold, or even a 1 year hold, as long as this stock is down 20 or 30%, and as you can see, it used to be $160 stock that's now about 80. So stocks like this, if you notice the AMDs, the Microns, they're all down about the same, which is close to about 50%. So in my opinion, I think these stocks are near their bottoms. All right, just going off my gut. So you might start seeing some rotation into the semiconductor companies that got killed. The same thing happened to companies like Salesforce. Now, Salesforce isn't a semiconductor company, but when AI was the big topic, Wall Street took all of their money out of software type companies. And then the software type companies came back, the Microsofts, the Salesforce, they all came back and was like, whoa, whoa, you can't do AI without us because we're the ones educating everybody on how to use it. I think the same thing's going to happen in some of these smaller semiconductor companies that didn't take part in the run to the upside. I think there's going to be a rotation out of Nvidia and all of these top companies. They're probably going to start rolling into some of these companies that have been getting hurt because, I mean, Broadcom, Nvidia, these companies have grown like tremendously, right? Nvidia is already 3.5 trillion now. It can fall 20 or 30%. And all that money that flows into these type companies are probably going to make them go up in price. So that's my opinion. All right. Hey, Jerome, what's going on? Jerome and Rome, JCI. Let's look at Johnson Controls, which is, I think, is one of Kramer's favorite companies. All right. Johnson Controls is doing its thing at all time highs. I'm not going to buy it way up here in the stratosphere, but if you in it, stay with it. All right. I mean, it's all the way up at its all time high. So to get in should have been way back here. I'm not going to buy it way up there. And I'm just assuming 200 days angled up. It increases your luck. But look at what we see short term. Yes, it's sitting at an all time. What do stocks usually do? What does anything usually do when it gets to their all time highs? They don't. I mean, they will hit a couple of new all time highs before rolling over, but for the most part, people just don't enjoy buying things at the all time price unless it has a catalyst behind it that can push it. What we like to see it do is we like it to hit an all-time high, but we like it to push through that all-time high for like 14 days. So it get to 87, maybe push to 100, then pull back to about 75. Then take about 2 or 3 months to get back to 100, go to 120, then pull back to like 80. You see what I'm saying? Because we wanted to stair step up in price. Well, it's taking a breather right now. With the 200-day being so close, I can see it coming down to 71. Now, if you just drew a trend line like this, as you can see, it could get to this trend line and then bounce right back up. So, it's doing okay. Let's look at coin. And I'm gonna have to get out of here in 3 minutes. All right, let's look at coin because I'm losing my voice. All right. All right, let's look at coin. So Coinbase, 200-day moving average is starting to angle down. Oh, that's not Coinbase. Coinbase. All right, Coinbase. It's not at its all-time highs, guys. Y'all know as much as Bitcoin's been running, Coinbase is probably the most legit uh cryptocurrency brokerage that's out there. All right. And I know a lot of people hate the company, but I'm sorry, it's like one of the most legitimate. It went through a whole process to legitimize itself. All right. I think even the government sends their coins to Coinbase to send, right? So if the government's using Coinbase, it's got to be legitimate in some way. All right. As you can see, the all-time highs is 428. So if you were to buy this now, I wouldn't be mad at you because the all-time highs was 428. We're sitting at 277. All right. So companies like this, until it reaches its 200-day, I'm sorry, until it reaches its all-time highs, you buy them on pullbacks. And then you wait for the momentum to get right back in. That's what you're using the 513 cross for. And then you ride that momentum to the upside. Now, you got short-term momentum to the downside. You even have what we call a head and shoulders pattern. That's the head, that's the shoulder. This is the other shoulder. That's not good. That's a bearish pattern, but it's short term. All right, y'all see it? The head, the shoulder, the shoulder. usually you run back down to the neckline, which is way down here at 176. So Coinbase could really, really drop in price. It looks like it's definitely going to 228. Okay. So if it gets to 228, it might sit there for a while. It might even flirt with 200, 199. And then if it can get some momentum back to the upside, buy it to the upside, because cryptocurrency, at least for now, I don't want you guys to come back 4 months later and like, you was wrong, Joel. At least for now, from what we see, it still looks bullish. Okay. Let's look what the week chart is doing. Yeah, the week chart is bullish. The day chart is still bullish, even though there's some short-term bearishness in the charts. And when I say short-term bearishness, that's 7 to 14 days. All right. Willie said bought RCL 2 years ago at $40, now looking to do the same with Carnival Cruise. All right, so RCL, is that like RCI? Oh, no, it's Royal Caribbean, duh. All right, Royal Caribbean is at its all-time highs. Y'all remember how much I hated the freaking cruise lines? Everybody who was buying them back when they were crap and losing money, they are telling me, I told you so, Joel. Hey, I ain't buying them. All right. Now they're at all-time highs. So congratulations on these trades. But this looks really, really, really good. Stay with it until the market tells you to get out. There might be some short-term bearishness, but remember, when you're using a day chart and you see a 513 cross, it might be 7 to 14 days of bearishness before it starts to go back up again. So be careful. So RCL and CCL. Now, I can't stand CCL, but it's finally starting to move to the upside. Finally. All right. It had been going down since 2000, since before COVID. CCL started to go down, guys, in 2018. That's why I hated it. I was like, oh my God, I love the cruise line. I hate the stock. Hate the stock. Hate the stock. Hate the stock. It finally hit a low here in now, mind you, you would have thought it hit a low in 2020. Nope, hit a low in 2022. Finally started to turn around right there. That was right around May of 2023. Went up in price, came back to the price it came from, because it ran up. Everybody made money and went right back down. And anybody that didn't make money from here to here said, hey, let's do it again. And then it went down and then up. And then the best time to buy this, anytime you see a stock that's bullish like this, best time to buy. If the 200 day is angled up, I increase my luck. I want to buy it when it hits the 200 day, especially if I'm holding it medium term, long term. See that? The 200 day is acting as support for the stock. And now it's in the stratosphere. Okay, hold it. I'm not getting in way up here, but if it comes back to $18, you shouldn't be surprised. Okay, even if it comes back to about 20, don't be surprised if that happens. Disregard charge point. I just realized the market cap is under $1 billion. Don't worry about that one. It was actually a legitimate company back in the day. Thanks for the feedback on Lunar. Yes, I'm being cautious, so you confirm my thoughts. I was just wondering if your golf game was as good as your trading. You know the answer to that. No, my trading by far is better than my golf game. That's one of my golf buddies. He also trades the market. Explain dollar cost averaging for dummy investors. All right, guys. So dollar cost averaging, I call it a stock mortgage, because people understand what a mortgage is. Because if you own or rent, if you got rent or you got a mortgage or you got a car note, you understand that on the first of the month, it don't matter what you doing in life, you got to make that payment. Well, dollar cost averaging is kind of the same thing. All right. Dollar cost averaging is when you're averaging in on a stock. So let's say you got $10,000 and I wanted to buy something like NVIDIA, and NVIDIA is just too high in price, right? Instead of taking $10,000 and buying it here, like let's say you're interested in buying this long term, but you're afraid because you're like, oh my God, I just took the 513 class that Joel had, and it shows that there might be some short term bearishness. Okay, that's fine. If you had $10,000 and you know that you wanted to hold this for five, let's say your plan was you believe that AI is real and you think that Nvidia's chips are going to be in high demand, and even though it's a $3 trillion company, you believe that one day it's going to get to 500. So if Nvidia can get to $500 in size, that means it'll probably grow 4 times its value. So if it has a $3 trillion market cap, 3 trillion times 4 would take it to about a $12 trillion company. And you believe it can happen in 5 or 6 years. Well, you don't have to put all your money in right here. If you had $10,000 expecting it to grow to $40,000 or $50,000 in the future, maybe take $3,000 here. And then as it goes down in value, you might say, if it drops another $5, I'll buy 3,000 more. And then if it drops another $3 and gets to 116, I'll buy 3,000 more. So now, even if you bought 3,000 here and 3,000 here, you got $6,000 in Nvidia. Even if Nvidia does this and never gets to this 116 and then all of a sudden explodes in price, the worst case scenario is that you got 6,000 in. You were still dollar cost averaging. You bought it here for 139. Then you bought some more at 130. So what's the average of 140 and 130? That means your average price would be somewhere around 135. You wanted to get your other 3,000 in, but you actually couldn't. But if you look up and you're like, hold up, my average is only 135. So as it starts to come up in price, if we get back to 135, you're still at break even. You can throw the rest of your money into Nvidia, and now you dollar cost averaged into that company for it to go up in price. That's one way to dollar cost average. Another way that people dollar cost average is what I call a stock mortgage. A stock mortgage is what I use for Tesla. When Tesla was only a $5 billion company, I wanted to put, it was a $25 billion company at this time. I told myself, I believe one day Tesla was going to be $100 billion in size. That was my number. I never knew in a million years that it was going to go to $1 trillion. Sometimes you just get lucky. When it was 25 billion in size, my goal was that it was going to get to 100 billion. I was going to invest 30,000 in it. So I put $30,000 into Tesla, expecting that it was going to grow 4 times its value. Now, why did I want it to go to $120,000? Because at the time, I wanted a Tesla. It wasn't a Plaid at the time. It was just the top of the line Tesla S. And I knew it was like $99,000, $100,000 plus tax was going to put me right around 120. I was going to buy the car for 100 grand, and then I was going to tin it up and put rims on it and all that crap, right? So I put the 30,000 in, but remember, not remember, I didn't have all $30,000. So I had the dollar cost average. I had to go make some money from the stock market, take $500, and I was putting maybe $1,000 into, actually I was putting $500 into Tesla every single month, right? Because I knew that at $30,000, if I was to buy a regular car note, that means I was going to spend about $6,000 a year on the vehicle. So my payment was going to be around $500 a month. So I was putting money into Tesla until I was able to get that $30,000 in every single month on the first of every month. And Tesla just started to explode in price. And if you watch any of my original videos, you're going to see that not only was I able to buy one Tesla, I was able to buy 2 cash with some money left over. So that's another form of dollar cost averaging. So I coined the phrase stock mortgage so that you individuals, including my kids, they know that on the first, my kids get $100 every month that they invest into the market, $50 every 2 weeks. And they know that on the now, even though there's a deposit every 2 weeks, they don't really buy anything until they see the volatility index rises, or they'll buy something on the first of the month. So on the first of the month, or at least in within that particular quarter, they're going to invest in some type of stock. So that's a way to dollar cost average, even in some of the companies that they're already invested in, even if it's at a higher price. Some people think that just because you bought it at 30, you can't buy it at 50 and buy it at 70, right? They're buying up. So a lot of the percentages y'all see that they have, their percentages would be a lot higher if they had only owned one share, but they're buying shares as it goes up. So they really could be up. I think my son really is up like something ridiculous in Nvidia, because he was buying Nvidia before me. And I got a 2,400% return, but it shows as a 900% return in his account because he didn't have all the money that he wanted to put in Nvidia at the time. He had the dollar cost average as it started to go up. But if he went off of his original share that he bought back in 2016, his percentage gain would be higher than mine. So that was a pretty good question. All right, guys. I'm going to do this for 9 more minutes, and then I really got to get out of here. What made you choose XRP as your first crypto investment? I don't even know. I'm trying to think to this day, why did I pick Ripple? I have no idea. I think at the time, I was interested in the market cap of it, and I think Ethereum had already run. I already owned, Bitcoin was already like $5,000. So I was doing what everybody else was doing. I was looking at the price. And I remember I bought it for like 23 cents. I remember to this day, I bought it for 24. I bought $500 worth for 20 something cents. All right. I think my average was like 34 cents. And then that bad boy ran to like $3, $2 or $3 or something. All I know is that my $500 investment was worth $7,500. And it was the fastest money that I had made in a 30-day period. Like, I've made some ridiculous returns, even in the options market, but I hadn't seen anything that particularly fast, and it wasn't options. So that's what got me hooked in cryptocurrency. KJ Johnson said, peace. Hey, that was a dope post that you made earlier, man. I appreciate that. DPZ, Domino's Pizza. I don't understand why my kids don't own. I think they don't like the company, but I've been trying to tell them to buy Domino's forever. And I think I'm going to start adding Domino's as one of those companies that I use as far as my core 30 companies, because I'm really into restaurant companies. I hadn't really owned them before. And I did own Chipotle back in the day, and I did get out of it when they had that rat issue, and I missed out on the move to the upside. And I'm totally pissed about that. But I do own Shake Shack. I do own Kava. I do own Wingstop. And I'm thinking about adding Domino's Pizza. But the 200-day moving average is angled up. 200-week average is angled up. And we missed out. Actually, I don't think we missed out too much. We missed out on the move at the 200-week moving average, but it looks like it gave you a chance this week where it hit a low of 421. So it's about $4 higher. And I mean, the 200-week moving average is at 411. So, this looks like something you might want to invest in long term, but be careful, because it looks like it's about to print a red candle on the TTM trend. And look what happens every time we print a red candle. You rarely see a red candle printed on the chart, and then we go up after that. Like, you see how no matter how far we go back, there's a red candle, one, and then it went up in price, one, and then it went up in price, one. But maybe this is a move like that. Maybe it can move back up in price, but be careful with the intention of it dropping to maybe 411. Okay, so I'm even going to set an alert here, because I'm interested in buying something like this one. So the way that you set up your alerts, you go down here, right click, create alert. I'm doing it in real time. If this bad boy drops to 400, then I might buy it. That's a dope pick. All right, we looked at Palantir earlier. Palantir does have government contracts. Fisker. You done brought up Fisker. I love the Fisker Karma vehicles. One of my friends was the first to ever have a Fisker that I was able. A friend of mine named Jamal owned a Fisker Karma, and that was my first time ever seeing it. He was the first person I knew with an electric type car. Now it did run on gas. The pure electric cars didn't really come out until about 3 or 4 years after that. But Fisker Karma, I thought it was FSR. Is it? Yeah. I don't know why the charts won't pop up. Come on, charts. And it does not want us to look at Fisker Karma. Thinkorswim was like, heck nah. Maybe it's too small. They won't let me look at it. All right. Can't look at FSR. I would, if I was a betting man, I would say don't buy it. If you're going to buy an electric car company, guys, buy Rivian. If you're going to go with a speculative company you think can rise, I hate Lucid. I love the vehicle, don't like the stock. Don't think it's going to be around unless the Saudis put more money into it or if Elon comes and buys it out. Rivian does have a chance of staying. And that's because Rivian is trying to get a grant from the government so that they can build uh, stations down here in Georgia. Actually, if you drive through uh, Republican Georgia, you're going to see a whole bunch of signs up saying they hope that Rivian doesn't come that way because going to build they're going to build Rivian places all throughout Georgia. So that's something that they're arguing about, which is kind of funny to me because Rivian is an actually good pickup truck that can bring businesses to Georgia, but they're like, heck, nah, we don't want it here. So if there was any that was going to survive, I would go with that one. I think my sons still have it in their portfolio. All right, Cureleaf. Why is cannabis getting killed? So Trump is about any and everything but drugs. He really is against alcohol and drugs. I think it's personal, some things that happened in his family. So, he really hasn't shown any love to the medical space. Now, the Democrats were showing a little bit of love, trying to make medical marijuana legal and trying to legalize it in a lot of these particular states. And they were on a lot of the ballots this year. But supposedly Trump is just not friendly for cannabis. So we might not see cannabis do anything until Democrats get back into office. So Curaleaf at one point was the largest cannabis company on the planet. Canopy Growth used to be number one. So if you go back to my videos way back in the day, I was talking about Canopy Growth. And the reason why everybody loved it because it was based out of Canada. And it was the first cannabis company to really, really start selling marketable products. But then that company got smashed because America wanted to take over the cannabis space. And during that time, companies like Green Thumb and Curaleaf exploded in value. Now, what I love about the cannabis space, guys, is that all of these cannabis companies, even the largest ones that are out there, they're no bigger than 2 billion in size. So if this space ever even gets a little bit of love, these companies are going to make people fortunes. That's why I just keep buying this stock over and over again with the expectations that I might be 80 or 90 when this stock finally hits. So my sons and my heirs will be able to eat off of my investments in this cannabis space. But I keep buying it over like every quarter. I'll throw 1,000 here, 1,000 there because you can buy a whole bunch of shares. I can buy 1,000 shares, you know, for $1.50, for $1.50, I can buy 1,000 shares for $1,500. So why not load up on those particular stocks? But I'm not expecting them to do anything. I'm not even pulling up their charts because fundamentally they're not doing well at this particular time. Did we look at QBTS? Quantum, anything quantum based. I told you, anything with a Q in front of it. Anything with a Q in front of it. Oh, that's D Wave. Okay. I don't know why I wasn't able to pull it up. So D Wave is moving. It's involved in quantum. So y'all want to write down all these quantum companies because I think my January Ask the Trader is gonna be focused on this. I just gotta go do a little bit more research because I don't know anything about the quantum space. I really don't have any knowledge on it. So I'm gonna take the time to kind of research it, see what I see on TV, and then I'll probably do an Ask the Trader that's based for these particular companies because these companies are starting to run. And if they're saying that this is going along with AI, and these are some of the companies that no one really knows about, you guys want to start writing these particular companies down. All right. But like I said, I got to research it. I got to use Ask Joe GPT to see what's going on with the companies. But as you can see, this one's not even at its all-time highs yet. So it still can run. And most of the time, when you see companies like this get really, really close to their all-time highs, they normally, since they're so close, a short seller or anybody that could short this company is just going to wait until we reach it and then hit new highs. So it's probably, this stock probably will hit $13 really, really soon. Please don't go out there and buy it just because I said it. But that's what momentum stocks do when they start running. When you look at the day chart, you also see the 200-day starting to creep up. And anytime you get a 200-day creeping up and you get momentum in this stock, when the stock pulls back and it starts to move up again, it's definitely a very good stock. All right, guys, I got to get out of here. I know I like to get to hold up. I still only got a couple of questions to go. I'm going to finish out everybody's questions. All right, because there's only like 6 more left. So Tanisha said 50 EMA or SMA. I like the SMA. So if you're going to go with I like simple, like I like simplicity and I like the default settings for most of the things that we trade. I don't really go in there and manipulate things too much. I'll manipulate the colors, but I try to keep everything the same. And because it's so easy to say simple moving average with SMA, I'm going to always go the SMA route. Even though if EMA is comfortable with you, go ahead and do it. All right. Carmela said, let's look at Hershey, which is HSY. 200 days angle down. You don't want to stay around. 200 days angle down. I know it sounds corny, but that's why I created it. When the 200 days angle down, you don't want to stay around. And you got a 513 cross. Look at how long this trended down the last time you got a 513 cross. You might get a 5, 10, 15, 20-day move to the downside. The week chart is okay. The week chart is angled up. So when you see something like this, right, this is why even going from one chart to the other chart, it depends on what you want to do. If I'm trading 7 to 10 days, the week chart means nothing to me. I'm literally going to use the day chart, trade off of that, look for 513 crosses to the downside. If you're looking to invest in this company, this is when you do it. Is it going to turn around within the next month or two? It can. But usually when it breaks this low, these are weeks, right? If I'm looking at a week chart, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It took 12 weeks for it to drop in price. Then it popped in price in 1 week, and now it's back down here in the doldrums. So anytime you see a move like that, which is a fake out, you need to watch out for it. But if you're buying this long term, you have to expect this happening until we can get above this 200 week, and then you'll start seeing it explode in price. All right, so be careful when you see that. BM Wash said, on clouds are good shoes. Yeah, that feels like you're on a cloud. That's why I own about 30 pair. All right, let's look at Oxy. Occidental Petroleum, I think. Yep, that's what it is. So this is another energy company. 200 week is angled up. Remember, that's where you're supposed to buy these. But look at the trend. I mean, it's red, red, red. It is going green on the TTM squeeze. So I'm in a pickle with this one. If you're buying it long term and you just have to own Occidental, this is when you buy it. Like if it's a company that I've been itching to buy, you buy it. If it's a company where I'm like, I can buy it and I don't feel like if I miss a day or two or a week or two, I don't feel bad, then I'm going to hold off and wait until I see the momentum go up and it looks something like this. I want it to look like this when I get in. I want it to look like this. I want it to go from red to green to a crossover. Then I'll buy it. So I would wait for it to move up for 7 or 14 days. And it's going to be a higher price than we are right now. But what I love about it is that it's not way up here at 77. So if I'm going to buy it, I'm going to wait until the momentum comes in behind it. And then I'm going to take it to the upside. But the day chart is also showing short-term selling. So you want to be careful with that one. Anthony said, thanks. XOM, what happened? Figured people be cold out here and need some heat. Well, fundamentally, you got to understand just because the fundamentals and common sense, even though we have a lot of common sense when it comes to stocks, it doesn't always pan out. And to be honest, when people get cold and need heat, they're going to buy natural gas. Unless Occidental Petroleum involves itself with petroleum and natural gas, you're probably going to see it falter. But the natural gas companies are probably doing okay. But XOM, guys, is Exxon. And Exxon, I love buying call options on Exxon. Like every January, I usually buy call options on Exxon, and then I'm usually out of those call options by like March or April. So it looks like I'm about to do the same thing. Exxon usually always does this, and then right around January, it starts to creep up, and then Joel will go in there and buy it. Like I bought some right around the $100 mark. I bought some right down here, guys. Literally, I bought these options right here. And I came in the room and told you guys when I was buying them. I was buying $120 call options on Exxon. As soon as we broke this trend, I started buying options right around this $100 area. Actually, I bought 3 sets. I bought the 100s, the 110s, and the 120s. And look at what we did. We went to 120 and then we reversed. It's almost like the options knew what I wanted to do. And then we bounced off the 200 day, and then we bounced off the 200 day again. And now it's trending down. So I want to wait until it goes green on the TTM squeeze, and then I'll probably buy call options again. All right. Brandon said, thank you for the jewels. Hey, I'm dead tired, but I'm going to try to, like I said, I love to get to everybody's stuff. You're right on Carnival Cruise. Willie said, thanks. We got a question about Cardano. Carmela said, thanks for her analysis. This is the last one I'm doing, Cardano. And we're going to use Ask Joel GPT for Cardano. And then I'm going to peace out. I'm not doing any more stocks, even though I love doing this for you guys. Cardano. If you did look at a post that I did earlier, I said that on January 1st, because everybody knows that this year and the year before, what I like to do is I like the dollar cost average cryptocurrencies. I like to buy $100 worth of it every 2 weeks, so $200 a month. So $200 a month, I'm going to invest in the cryptocurrency market no matter what happens. Now, if at the end of 12 months that crypto is lower, then that means that my family is going to have a okay Christmas. If cryptos move through the roof like it did this year, then our family can expect some very good presents because what I usually do is I sell all of my crypto. All right. And then that's what I use to go purchase gifts with. I start investing in it early so that when December comes, I don't have to worry about where the money is going to come from. So I do a stock mortgage in crypto. The reason why I'm saying that is because I told everybody that this year I'm probably going to buy, I was buying Ethereum last year. This year, I think I'm going to buy Cardano and maybe a little bit of Chainlink and maybe some Solano. So I'm going to buy some of the smaller coins, but Cardano is one of them. Cardano, guys, and let's go to Ask Joe GPT. Cardano, the maker of Cardano, which is also called ADA, used to work with Ethereum. The person, I forgot his actual name, but the person that helped build Ethereum broke away from Ethereum and decided to create his own coin, which is the Cardano coin. What is Cardano? Another reason why I like Cardano is if you talk to anybody that lives in certain parts of Africa, you're going to notice that Cardano, especially in areas where they don't trust the banking system, they're using Cardano as their cryptocurrency, as their currency. But Cardano is also into smart contracts, which I don't want to get too, you know, complicated with explaining what Cardano can do. But Cardano is similar to Ethereum, and a lot of people like it because it's smaller than Ethereum, but it has growth potential. And like I said before, you're seeing a lot of countries use it as their form of currency. So again, you can read through here and learn about what proof of stake and all that means. But all that to say is, if you're interested in Cardano, it's similar to Ethereum. Let's look at what the market cap is, because a lot of you guys don't really know how big Cardano actually is. How big is Cardano in market cap? And as you can see, Cardano, looking at its charts, it's 92 cents a token. It's up 3% today. It's worth 32 billion. So even though it's 92 cents, this is the prime example of why some people think they're dealing with a penny stock, and they don't realize this isn't $1 billion or less in size. This bad boy is 32 billion. That's why I can talk about just about any cryptocurrency that's out there. I tell people all the time that the cryptocurrency is the new penny stocks. Anybody that's still involved in penny stocks, I don't understand why, because this is the new penny stock rage, cryptocurrency. And it seems to be a use case for a lot of them, where a lot of these penny stocks that a lot of us are buying, the companies that are penny stocks, they're penny stocks for a reason, because they can't be legitimate enough to be bought on Wall Street or have these pension funds and mutual funds invest in their companies. All right. So I'm coming to you guys from Decatur, where it's greater. I'm about to go to sleep and I'm out of here. Good luck. I'll probably do another video probably sometime next year. But good luck to you guys. Merry Christmas and have a happy new year.